Yes, people, good morning, good afternoon, good evening to all South India student. How are you? Hope so you are good. I'm also good. So guys, many student requested that, sir, we took your classes in the last year. So in the last year, as per the Finance Act 2024, we have attended your class. Now we are going to appear for the examination in the May or September 2026 for the CA final, or in case of the June December 2026 for the CMA final. Then sir, question is that, sir, what are the amendments applicable for our examination? Because for your examination, you know that Finance Act 2025 is applicable. Now one more clarification or instruction, I can say that if you already attending our latest batch that is applicable for the May, September or June, December 2026, then guys, this lecture is not for you, because this all amendments are already covered in our latest classes. Now this amendment is applicable only when you took the earlier batch, last year batch, and guys, now you are appearing for the examination in the May 2026 onwards. So let's start with the amendment part, sir. What are the amendments? So in the first topic, that is the tax rate topic, guys, in the tax rate there are three small changes. One is the change is related to the tax rate of the foreign company. That is a standard change. Every year they change this like this. So guys, in case of the domestic company, your tax rate is a 30%. But guys, if that domestic company turnover for the previous year 23-24, now you have to check the turnover for the previous year 23-24. So if your turnover for the previous year 23-24 is within the limit of the 400 crore, in this particular case, your domestic company tax rate is 25%. So in simple word, I can say that here in case of the domestic company, your tax rate is 30%, but domestic company turnover for previous year 23-24 is within the limit of the 400 crore, then tax rate is 25%. Done. Now guys, there is a one more change in the tax rate of the 115 BAC, and that is very interesting change. 115 BAC, now last year tax rate was different. In 115 BAC last year that slab rate was up to 3 lakh, there was no tax. 3 lakh to 7 lakh, 7 lakh to 10 lakh, 10 lakh to 12 lakh, and 12 lakh to 15 lakh. Now guys, there is a one beautiful slab, and this is applicable from the assessment year 26-27. Now guys, here the slab rate says that up to 4 lakh of the total income there is no tax. 4 lakh to 8 lakh, there is a 5%, 8 lakh to 12 lakh, 10%, 12 lakh to 16 lakh, 15%, 16 lakh to 20 lakh, 20%, and 20 lakh to 24 lakh, 25%, and more than 24 lakh income, 30%. It is very simple to remember. How you will remember? So here just increase the 4 lakh rupees. So here just increase the 4 lakh rupees, and here just increase the 5%. And guys, whatever your income in excess of the 24 lakh, and for that income the tax rate is the 30%. So just add the 4 lakh, 4 to 8 lakh, 5%, 8 lakh to 12 lakh, 10%, 12 lakh to 16 lakh, 15%, 16 lakh to 20 lakh, 20%, 20 lakh to 24 lakh, 25%, and more than 24 lakh is a 30%. Okay, now guys, one more point. Sir, your special rate, because this is like income, your special rates of income. What about the special rates of income? Like long-term capital gain is taxable at the rate, long-term capital gain is taxable at the rate 12.5%. Long-term capital gain under section 112A is taxable at the rate 12.5% in excess of the 1,25,000. Short-term capital gain taxable at the rate 20%, triple one taxable at the rate 20%. Winning income is taxable at the rate 30%. Carbon credit sale point income, that is taxable at the rate 10%. So question is that, sir, what about the special rates of income? So guys, that special rates of income will be taxable as per the special rates only. This tax rate is for the general rate of the income. Special rates of income is going to be taxable as per the special rates only. Okay guys, now there is a one more interesting changes in the 87A. And guys, you know that in the old taxation regime, that 87A rebate is available when your total income is up to 5 lakh. So in case of the resident individual and total income is up to 5 lakh rupees, then guys, the rebate is available at the rebate is available, that is 100% of tax or 12,500, whichever is lower. So 100% of tax or 12,500, whichever is lower, that rebate is available. But guys, now in the new taxation regime, they made one changes. And in the new taxation regime, if the assessee is the resident individual and his total income is within the limit of the 12 lakh, then guys, this rebate is available as 100% of tax or 60,000, whichever is lower. 100% of tax or which 60,000, whichever is lower, this rebate is available. So that's why people are saying that up to 12 lakh there is no need to pay the tax. So if your income is within the limit of the 12 lakh then there is no need to pay the tax. Why? Because suppose if your income is at 12 lakh, your total income is 12 lakh. So up to 4 lakh obviously there is no tax. 4 lakh to 8 lakh 5%, it means 20,000. 8 lakh to 12 lakh there is a 10%, it means 40,000. So here total tax comes to the 60,000. Here total tax amount is a 60,000 and 60,000 will be rebate. So 60,000 is rebate. So if your total income is within the limit of the 12 lakh, then there is no need to pay the tax. Now guys, one more point. One more interesting point is that if you remember in the salary head, if you follow the 115 BAC default taxation regime, then under salary head, there is a 75,000 standard deduction. 75,000 standard deduction under section 16. So under section 16 there is a 75,000 standard deduction. So question is that, okay, sir, is that is available? Answer is yes, that is available. In 115 BAC 75,000 is also available, and that's why in the practical life we are saying that, okay, if you are having the salary income, then even your salary income is up to 12,75,000, there is no need to pay the tax. Your salary income is up to 12,75,000, there is no need to pay the tax. Why? Because 75,000 is a standard deduction under the head salary, and after that on the 12 lakh rupees tax will be 60,000, and you will get the rebate under section 87A of rupees 60,000. But guys, there is a one more interesting change in this time. And that is interesting change that this rebate under section 87A in the new taxation regime, this rebate is available only against tax calculated as per this slab rate. This rebate of 87A in the new taxation regime, it is available only against the tax calculated as per this slab rate. Tax calculated as per this slab rate, tax calculated as per this slab rate, tax calculated as per this slab rate. It means, guys, this rebate 87A is not available against your income taxable as per the special rates. So guys, this is clarified by this, but this is only in case of the new taxation regime, 115 BAC. So under section 115 BAC, guys, this rebate under section 87A is available only against the tax computed according to this slab rate. It means this rebate is not available when you are having the special rates of income. So suppose long-term capital gain 112A is taxable at the rate 12.5%, long-term capital gain 112 and 112A both are taxable at 12.5%. Short-term capital gain 111A taxable at the rate 20%. Winning income taxable at the rate 30%. Like that carbon credit income taxable at the rate 10%. Guys, this is all special rates of income. So against this special rates of income tax, this rebate under section 87A is not available in case of the new taxation regime. So guys, here one example is given. If you check now, so there is a one example is given. There is a one person name is a Kavi. Kavi opted the 115 BAC, the total income is a 12 lakh, but under 12 lakh income, guys, STCG 111A is a 2,40,000, LTCG 112A is 450, and remaining income is a 510. So you calculated tax on this. So here STCG 111A tax is 48,000, LTCG 112A tax is a 40,625, and tax on balance income is a 5,05,000. Guys, here rebate will not be available again the tax on this and this. Rebate will be available only on the tax calculated as per the slab rate, that new slab rate. So here rebate is available only of 5,500. You got my point or not? Yes. Okay guys, one more point. Okay, like normally what happened in the old taxation regime, you know that this rebate under section 87A is not available against LTCG 112A, but other than 112A, against any type of the special income also this rebate under section 87A is available. Okay guys, now one more point is, okay guys, here you know that marginal relief concept is applicable. So in case of the new taxation regime, that marginal relief concept they have introduced. So marginal relief concept means, suppose if your income is little bit more than 12 lakh, and due to that what happened, there is a tax liability, and tax is more than the income increase over the 12 lakh. So in this particular case, whatever the increase in the income, that much only you have to pay, and remaining will be your marginal relief. I can take an example. Suppose your income is 12,30,000. So your income is 12,30,000. Suppose if your income was only 12 lakh, then there is no tax at all due to the 87A rebate. But here your income is 12,30,000, and due to that what happened? Okay, your tax is 64,500. Due to that, your tax is a 64,500. Here income is increased over 12 lakh is 30,000, but due to that, the tax is increased is 64,500. There is no rebate at all. So guys, here there will be a marginal relief of the 34,500, and you have to pay only 30,000 to the government. So here 64,500. After that, you will write that this amount is restricted to tax on 12 lakh. So suppose if your tax was only 12 lakh, suppose your tax was only 12 lakh. Suppose your tax was only 12 lakh, suppose your income was only 12 lakh, then obviously there is no tax. So in excess of the 12 lakh, NTI minus 12 lakh is a 30,000, whichever is lower you will continue, automatically there will be a marginal relief, and 30,000 plus 4% health and education says this much you have to pay to the government. Done. So this is guys some changes in your topic number 1, that is the tax rate. Okay. Now in the capital gain topic, there is one small change here. Okay, like you know that FII hold any security as per the RB, as per the SEBI guidelines, then that security is always treated as capital asset. Here they have mentioned the investment fund also. Investment fund means alternate investment fund category 1 and category 2. So alternate investment fund cat 1 and cat 2. So alternate investment fund, if the investment fund is holding any security, then that security is also treated as your capital asset. In capital gain, after this, as such there is no such amendment, but guys that you have to remember, like before 23rd of July 2024, if you transfer any asset, then there was an indexation. How calculate indexation? Rate also you have to remember. Answer is yes, rate also you have to remember. Earlier on the long term capital gain, that rate was 20% with the indexation. Now that rate is 12.5%, but index benefit is not available. Okay. Now guys, here in the capital gain under section 54 EC, there is one small amendment in section 54 EC, and that amendment is, you know that NHI, RECL, PFCL and IRFCL, there were 4 type of the bonds. If you purchase after transferring the immovable property, then guys exemption is available. Now here they have added the 2 more bond. One is the HUDCO and one is the IREDA. So HUDCO means that is the Housing Urban Development Corporation Limited bonds, and one is the Indian Renewable Energy Development Agency, that is the IREDA bond. HUDCO bond should be purchased on or after 1st April 2025, and IREDA bond should be on or after 9 July 2025. In this particular case guys, in this particular case, exemption is available. Done. After that, in the capital gain guys, as such there is no amendment in the capital gain. In the other sources also guys, there is no amendment in the other sources. There is no amendment. Now in the buyback topic you have to remember, because you know that in the buyback earlier what happened in case of the buyback, if you remember that earlier before the 1st October 2024, in case of the buyback, there was section 115 QA, and company is required to pay the tax on buyback, that is buyback price minus issue price, that 20% plus 10% and plus 4%. Now that is not applicable. So for this year, for the buyback, by the domestic company, you have to just remember this. In hands of company, there is no tax treatment, and whatever the buyback price, that is going to be taxable in hands of the shareholder. That is going to be taxable in hands of the shareholder as a deemed dividend under section 222F. So whatever the total buyback price, that is taxable in hands of shareholder as a deemed dividend. And guys, the cost of the shareholder will be treated as the short-term capital loss. So that cost of the shareholder means whatever the cost, full value of consideration is nil, minus cost of acquisition of share. So here that will be treated as your short-term or long-term capital gain. That depends on the period of holding of that share. Done. So that is one point. After that guys, in the topic of PGBP, in the PGBP guys, there is no as such amendment, but you have to remember one point from the 43B. You know that there is a 43B section, and 43B says that there are certain payment which you have to make the payment up to the due date of return filing, then only it is allowed as deduction in the current year. Otherwise it will be allowed in the year in which payment is made. Now guys, you know that in that there was a one point, interest on the loan, and loan is taken from the scheduled bank or public financial institution or state financial corporation or state industrial investment corporation or NBFC, then interest has to be paid up to the due date of return filing. Otherwise interest is not allowed in the current year. Now in that point there was one more point, sir, suppose if that interest is converted into the loan, Is it is treated as actual payment? Answer is no. Or suppose against that interest, if any debenture or any instrument is issued, is that will be treated as actual payment? Answer is no. Because here it is mentioned that if interest is payable on the loan is converted into debenture or any other instrument by which the liability to pay deferred to the future date, then it shall not be treated as actual payment. But guys, if you remember, there is a one case law in case of the frontier. So here if debenture or any other instrument like bonds and all is issued now, then it is not treated as actual payment. But suppose for an example, against outstanding interest, if any equity share is issued, if equity share is issued, is it will be treated as actual payment? Answer is yes, guys. If equity share is issued, then it will be treated as actual payment. There is a one case law in, I think name was a frontier, that is given in the last pages of the compact. So that is one case law. Okay. One more point is, okay, guys, here the definition has been changed for the micro and small enterprise. Now your micro enterprise means that enterprise investment in the plant and machinery equipment should be within the limit of 2.5 crore, and guys, turnover should be within the limit of the 10 crore. So turnover is within the limit of the 10 crore, investment in the plant and machinery equipment is within the limit of the 2.5 crore. But in case of the small enterprise, guys, this limit is 25 crore and 100 crore. So exactly you can say that the 10 times. So 2.5 crore to 25 crore and 10 crore to 100 crore. So in micro enterprise, investment in the plant and machinery equipment is within the limit of 2.5 crore and turnover 10 crore. And in case of the small enterprise, investment in the plant and machinery equipment within the limit of 25 crore and turnover is within the limit of the 100 crore. So that is called your micro and small enterprise. So guys, if you make the payment to the micro and small enterprise, then payment has to be made within the time given under section 15 of the MSME Act. Otherwise that expenditure is not allowed in the current year. It will be allowed in the year in which actual payment is made. Okay, now in the PGBP, guys, there is a one new section, and this new section is basically in case of the non-resident. Guys, there are certain section for non-resident. If you remember that shipping business, then your PGBP income is a 7.5%. PGBP income is 7.5%. In case of aircraft business, it is a 5%. So in the same series, same line, there is a one section 115 BBD, and this 115 BBD is introduced by the Finance Act 2025, and it is applicable for assessment year 26-27. Now this section says that, okay, you know that in India there is no electronic manufacturing facility. But our government wants that in India, people should set up the manufacturing facility for electronic goods and all. So for that purpose, they will come up with one scheme. And according to that scheme, suppose if any Indian resident company is doing that manufacturing activity of electronic goods, in this particular case, if any non-resident is provided any service or technology to set up that unit, then guys, whatever the amount received or deemed to be received by non-resident, then on that amount 25% will be the PGBP income. So this is very simple section. This section is applicable in case of non-resident, but non-resident is getting the income by way of business for providing the service or technology for setting up an electronic manufacturing facility, or in connection with manufacturing or producing electronic goods or article or things in India. So guys, either for setting up the manufacturing facility for electronic goods, or in connection with manufacturing or producing electronic goods or article in India, and it is provided by non-resident to the resident company which is establishing and operating electronic manufacturing facility or connected facility for manufacturing or producing electronic goods, article or things in India under the scheme notified by the central government, and that resident company satisfy the condition prescribed on this behalf. Guys, this section is applicable only for non-resident, and here your income will be the PGBP income is 25% of a specified sum. So specified sum means amount paid or payable on account of providing service or technology, or amount received or deemed to be received on account of providing this particular service. On that, whatever amount received by that non-resident, now on 25%, on that 25% is your PGBP income. Option to declare the lower profit. Can non-resident declare the lower profit after audit of books of accounts? Answer is no, that is not allowed. And guys, can they set up the brought forward losses? Answer is no, that is also not allowed. And done. Okay guys, after that in the PGBP, in the ICDS topic, obviously there is no amendment. After that, in the political party, partnership, firm, and guys, AOP BOI, there is no change. Okay, in the trust topic, there is a business trust topic, there is a small change. In the business trust topic, if you remember, then I have mentioned that in case of business trust, if there is a income and that income is not an interest from SPV or dividend from SPV or REIT rental income on the own property. Other than this three income, if there is any income of business trust, if there is a long-term capital gain, normal long-term capital gain, that is taxable under section 112 at the rate 12.5%. If there is a short-term capital gain under section 111A, that is taxable at the rate 20%, and all other income are going to be taxable at the rate MMR. MMR is maximum marginal rate. But there was a question. Yes, sir, if business trust is having the long-term capital gain under section 112A, so sir, how this 112A will be taxable? Because under section 115UA, if you remember, that is clearly written that LTCG is taxable as per 112, STCG 111A is taxable as per the 20%, but other all income are taxable as per MMR, because in the law it is written that subject to this two section, all other income is taxable as per MMR. So here question is that sir, LTCG 112A was not written. LTCG 112A was not written. So if there is a LTCG 112A, so it is taxable as per the MMR, or it is taxable as per 12.5% in excess of 1,25,000. So guys, there was no clarity in the law, and this time they made the clarity. And this time they mentioned that LTCG under section 112A, then obviously it is taxable as per the 12.5% in excess of the 1,25,000, because they mentioned that in case of business trust, that's subject to three income. Subject to three means as per like 112A will be taxable as per 112A, 112 will be taxable as per 112, STCG 111A is taxable as per the STCG 111A, and all other income will be taxable as per the MMR. Done. So this is one change in the business trust topic. Investment fund, securitization trust, there is no as such amendment. Okay, now in the MAT topic, AMT topic and SEZ, there is no amendment. Now in the deduction topic, guys, there is a one amendment under section 80CCD. So 80CCD is basically like when you contribute towards the NPS. NPS means new pension scheme, or we call it national pension scheme or central government pension scheme. Then you can get the deduction on your contribution, own contribution. You can get the deduction under section 80CCD1. That is your own contribution or 10% of salary. Or in case of the like self-employed, there is a SSC contribution or 20% of GTI, that is deduction is allowed. Now guys, you know that there is a one section 80CCD1B, and 80CCD1B says that suppose under section 80CCD1 you have not claimed the whole deduction, then 50,000 deduction you can claim under section 80CCD1B. Now there is a one new concept introduced by our government, that is the NPS Vatsalya. Now first point is under NPS, you know that if I started the NPS account, then I should deposit in my name only. That NPS, that national pension scheme account should be in my name. But there is a one new concept they have introduced, that is the NPS Vatsalya. Now under NPS Vatsalya, what happened? Okay, you can open the account in the name of the children also, minors. So I have the one child, name is a Devam, and his age is a 9 year. So I started just NPS in his name. So I can deposit in his name under the national pension scheme. So question is that whatever I deposited in the name of my child, that is under NPS Vatsalya, on that amount can I claim the deduction under section 80CCD or not? So here guys, they mention that if anything is deposited in the name of the child, then under NPS Vatsalya, then on that you can claim the deduction under section 80CCD1B within that limit of the 50,000. So this is not an extra deduction, but whatever the limit of the 50,000 that apply. And guys, under section 80CCD1B, I can claim the deduction up to rupees 50,000. You got my point or not? Yes. Okay. One more point. Suppose NPS Vatsalya, if we withdraw anything. So we withdraw up to the 25% of total contribution made. So whatever contribution we made out of that, suppose we withdraw up to the 25%, then guys, it is exempted. But after that, it is going to be taxable. So suppose I made the NPS Vatsalya contribution aggregate is 5 lakh rupees. Now out of the 5 lakh, if I withdraw up to 25%, so 5 lakh 25% comes to the 1,25,000. So up to 1,25,000 it is exempted. But if I withdraw after 1,25,000, then that is going to be taxable. But suppose if there is a death of the minor child, then amount is received by the guardian or parents, then that amount is going to be exempted. So that is one small change under section 80CCD. Now guys, there is a one more change in section. There is a one more change in section 80LA. Under section 80LA is related to the IFSC located unit. And guys, in the IFSC, if any person is transferring the aircraft or ship which is leased by a unit of IFSC and such unit has commenced the operation. Earlier that date was 31st March 2025. Here now that date has been changed to the 31st March 2030. Now in the same line, section 80 IAC. 80 IAC is for a startup. So in case of the startup, that 3 years there is no need to pay the tax out of the 10 year. So guys, here you know that earlier that date was 2025. Now that date has been changed to the 2030. So here that company or LLP should be incorporated during 1st April 2016 till 31st March 2030. 1st April 2016 till 31st March 2030. Done. So this is one small changes here. After the deduction topic, guys, after deduction topic in the clubbing there is no change. In the set up and carry forward there is a one change. Now guys, if you remember in the set up and carry forward, what happened, can normally suppose if you incur the loss, then who will set up and carry forward? Only you will set up and carry forward. But there are certain exceptional cases where losses incurred by the earlier SSC can be carry forward and set off by the another SSC, and that exceptional cases are 4 cases. One is the amalgamation, one is the demerger, and one is the succession. Basically 3 cases. Succession means proprietor to company, partnership firm to company, or small company to LLP. Now guys, question is that suppose sir, if there is an amalgamation, like Vodafone incurred the losses, Vodafone merged with the VI, so VI is allowed to carry forward and set off the losses. So question is that sir, VI can set up and carry forward that losses, but how long? Because you know that in case of amalgamation, demerger, succession, only business loss other than speculative business loss and unabsorbed depreciation can be set up and carry forward by the new SSC. But sir, what happened in case of amalgamation? You know that earlier that time period was given as a fresh 8 year. Suppose Vodafone incurred the losses like 5 years ago. Now there is an amalgamation with the VI and Vodafone Idea. So Vodafone Idea again will restart with that losses and can be carry forward for the fresh 8 year. In demerger, from like starting only in demerger, it was clearly written that the remaining period of out of 8 year. But guys, in the amalgamation and in case of succession, they have written the fresh period of 8 year. That has been changed. That has been changed, and now they mention that okay, here guys, this fresh period of 8 year is not applicable if there is an amalgamation or this succession took place on or after 1st April 2025. Then guys, new entity is allowed to set up and carry forward the losses for the remaining period out of the 8 year. So for the remaining period out of the 8 years, so for an example, if 4 years already passed, then for the remaining 4 years, they can set up and carry forward the losses. You got my point or not? Yes, sir, we have understood your point. Now next part. So this is the one change in the setup and carry forward. After that guys, in the TDS, TCS, obviously there are certain changes related to the rate change, or you can say that the limit change. First is under section 193. 193 section, there is a TDS on interest, interest on the security. So TDS on the interest on security till last year, that limit, there is a there was a limit if interest is more than 5,000, then only required to deduct the TDS. Guys, that limit has been raised to the 10,000. So now this limit is at 10,000, like up to 10,000 if interest is paid on the security, then there is no need to deduct the TDS. After that, under section 194, guys, if any dividend is paid to the individual and that is paid by any mode other than cash, then earlier that limit was 5,000, up to 5,000 there is no need to deduct the TDS. Now this limit has been raised to the 10,000 rupees. So here it is at 10,000. Okay. Now one more section is a 194A, that is interest other than interest on security. Now here in this particular section, what happened? Okay guys, you know that interest is more than 5,000, then only you required to deduct the TDS. Earlier that interest was more than 5,000, then only you required to deduct the TDS. Now that limit has been raised to the 10,000. Means interest is more than 10,000, then only you required to deduct the TDS. That 5,000 limit is raised to the 10,000. Now one more point. Guys, if interest is paid by the bank or cooperative bank or post office on the FD or RD, then you know that earlier that limit was 40,000 in case of normal person, senior citizen 50,000. Means interest is more than 40,000 or 50,000, then only TDS is required to be deducted. But guys, now this limit has been increased to the 50,000 and 1 lakh. So normally if bank or cooperative bank or post office pay the interest and that interest is up to 50,000, then there is no need to deduct the TDS. And in case of senior citizen, that limit is the 1 lakh rupees. So that is one change under section 194A. After that guys, under section 194B and 194BB is related to winning. In case of the lottery winning, crossword puzzles, as well as the horse races, earlier what happened, that limit was 10,000. Now also the 10,000 is limit, but earlier that 10,000 per annum limit was there. per year limit was there. Now that limit is a single transaction. So in single transaction, if the winning is more than 10,000, then only TDS is applicable. So this limit is applicable now on the single transaction. If single transaction winning is more than 10,000, then only TDS is applicable. Okay. Now after that, guys, there is a one more small changes in the section number 194D. 194D, if you remember that till last year, that insurance agent commission, the TDS rate was the 5%. Now that TDS rate is 2%. And if any insurance commission is paid to the any domestic company, pay is a domestic company, then that rate is at 10%. In case of the lottery agent commission, that TDS rate is 2%. In case of the commission and brokerage under section 194H, then also TDS rate is 2%. So in case of commission and brokerage, now TDS rate is 2%. One more point, earlier you know that till last year that limit was 15,000, up to the 15,000 there is no need to deduct the TDS. Now that limit has been raised to the 20,000. Now that limit has been raised to the 20,000. So if commission and brokerage is up to the 20,000, then there is no need to deduct the TDS. If commission brokerage more than 20,000, then only TDS is applicable. Done. After that, under section 194DA, that is death after life insurance policy maturity. So in this case, that rate is the 2%. Okay. Now 194I, there is a change in 194I. 194I is a TDS on the rent. So in the TDS on the rent, you know that earlier that limit was 2,40,000. For the whole year, if rent is paid more than 2,40,000, then only TDS is applicable. Now guys, that limit has been changed, and 2,40,000 per annum is changed, and now it is the 50,000 rupees per month or part of the month. So now this limit is in line with the section 194IB. 194IB is also TDS on the rent on the immovable property. So guys, this limit is in line with the 194IB, and here like TDS is required to be deducted only if the rent per month or part of the month is more than 50,000, then TDS is applicable. But rate is the same. There is no change in the rent. Like plant and machinery equipment 2%. In case of land, building or furniture, here it is a 10%. But under section 194IB, there is a TDS rate is the 2%. But limit has been changed, and limit is like up to 50,000 rent per month or part of the month, there is no TDS, but more than 50,000, then there is a TDS under section 194I. Okay. One more point. One more point is related to the 194J. Guys, under section 194J, if you remember, the TDS on the professional fees, technical fees, royalty, non-compete fees and director fees. For the director fees, there was no limit. Means in case of director fees, if you paid 10 rupees, then also TDS is required to be deducted. But guys, in case of the professional fees, technical fees and royalty and non-compete fees, there was a limit of 30,000. Now guys, that limit has been increased to the 50,000. So here that limit has been increased to the 50,000. So 50,000 rupees is a limit. Done. After that, 194K. Guys, 194K is you are earning income from the mutual fund. So suppose if there is a mutual fund income, so in case of the mutual fund company distribute any income, then on that income that TDS is required to be deducted. Earlier that limit was 5,000. Now that limit has been raised to the 10,000. And under section 194LA, LA means that compulsory acquisition. So compulsory acquisition, in case of the compulsory acquisition, till last year, this limit was for the compensation was 2,50,000, more than 2,50,000, then only TDS is applicable. Now this limit has been raised to the 5 lakh rupees. So that is one change in the TDS. Okay. Now guys, after that, there is no change in the TDS. So TDS is only this much are the changes in the TDS topic. Now okay, one more point is, you know that in the TDS, till last year, you used to study one section, that is a 206AB, and that section says that in the last year, if you have not filed the return, and if your TDS or TCS was deducted or collected of that amount, then in this particular case, the TDS rate will be higher, that twice the rate, and all that section has been removed. So section 206AB, that section has been removed from the TDS topic. So this section is already removed from the TDS topic. Done. After that, guys, there is a one new section 194T that is applicable. This is already introduced last year, but it is applicable from 1st April 2025. And this section says that any partnership firm pay any salary, remuneration, commission, bonus or interest to the partner, then guys, there is a TDS at the rate 10%. Means here, like firm is required to deduct the TDS. So here 194T says that any salary, remuneration, commission, bonus or interest to a partner by the firm, then TDS is required to be deducted at the rate 10%, and TDS is required to be deducted only in a year that payment is more than 20,000. If it is up to 20,000, then obviously there is no need to deduct the TDS. Okay, now one more point here, like even that interest or remuneration is allowed or disallowed to the firm, here TDS will be applicable on total amount. Here TDS is required to be deducted on the total amount. Done. So this is the completion of your TDS TCS amendments. Sorry, TDS amendment. Now let's start with the TCS amendment. So guys, in the TCS, there is a one small change. In case of the Tendu leaves, the TCS rate is 5% only. In case of the timber and other forest product, now TCS rate is 2%. So in case of earlier it was 2.5%, now it is a 2%. So in case of the timber and other forest product, the TCS rate is the 2%. That is the one change. And guys, in case of the obviously that toll plaza, parking lot and mines and quarry, that lease and license, here TCS rate is 2%. After that, there is a one change, and that change in the TCS, under section, there is a one more change in the TCS under section 206C subsection 1F. So guys, under section 1F, you know that earlier that TCS was applicable only in case of the motor vehicle. If motor vehicle is for more than 10 lakh, then TCS is 1%. Now they have added all the fancy item. That's why you can remember 206C 1F means all fancy item like wristwatch, here any art piece such as antique painting, sculptures, collectibles such as the coin, stamp, yacht, the drawing boat and all. So they have helicopter and also they are also like covered here. So if you are purchasing any helicopter of more than 10 lakh rupees, then TCS is applicable at the rate 1%. Okay. Now guys, there is a one major change in the section 206C subsection 1G. 1G means we always remember by way of the global. Okay, suppose for an example, you are sending the money outside India for the under the LRS scheme, liberalized remittance scheme. Then earlier you know that limit was 7 lakh, means up to 7 lakh there was no TDS. More than 7 lakh, if it is for medical or educational purpose, then 5%. If it is for other purpose, then it is a 20%. Now guys, that limit has been raised to the 10 lakh. So up to the 10 lakh rupees, suppose under the LRS scheme, if money is remitted outside India, if it is up to 10 lakh rupees, then there is no TDS. If it is more than 10 lakh rupees for the medical purpose, then there is a 5% TDS, and it is for the other purpose, then 20% TCS, not TDS, it's TCS. Okay. Now guys, one more point is, you know that in the last year, suppose for an example, if any amount remitted outside India out of the educational loan, then TCS rate was 0.5%. But guys, that has been removed, and now the law says that suppose if any amount is out of the educational loan, then TCS is not applicable at all. So here they made the amendment in case of the LRS, if remitted is out of the educational loan referred under section 80E of the deduction topic taken from the financial institution, then TCS is not applicable at all. Done. Okay guys, now in case of that OTPP, overseas tour package program, your honeymoon package, so for the honeymoon package also the TCS rate has been changed. And TCS, like that limit has been changed. So here now, if that package value is up to the 10 lakh, then TCS is applicable at the rate 5%, and package is more than 10 lakh, then in excess of the 10 lakh, the TCS rate will be the 20%. So up to the 10 lakh, it is a 5%, and in excess of the 10 lakh, 20% is the TCS rate. Done. Okay. Now guys, you know that till last year, there was one more section in the TCS, that is the 206C subsection 1H. This section has been removed by the lawmakers. So with effect from 1st April 2025, this 206C subsection 1H, this is not applicable. This is not applicable. 206C 1H is not applicable. Means guys, now only 194Q is applicable, because this is the similar section of the Q. Now seller is required to collect the TCS under section 206C 1H. So that 206C 1H is not applicable. Only 194Q is applicable. So if only buyer turnover is more than 10 crore of the last year, then buyer is required to deduct the TDS in excess of 50 lakh at the rate 0.1%. Done. So this is the changes in the TDS TCS topic. Now guys, in the return filing topic, in the assessment procedure return filing, one change is, this is the change that suppose if there is a loss return and if you file the late return, then obviously that losses are not allowed to be set up and carry forward. But guys, for an example, that losses are not allowed to be carry forward and set up. But guys, suppose for an example, if there is a genuine reason, and due to the genuine reason, if you file the late return, then guys, you can request to the income tax department, please allow me to carry forward the losses. So to whom you have to make the application? So guys, here application should be made to the CIT or PCIT if that loss is within the limit of 1 crore. If that loss is more than 1 crore up to the 3 crore, then CCIT, and if that loss is more than 3 crore, then the PCCIT. So you have to request to this authority, and this authority will allow to carry forward the losses. Done. After this, guys, there is one more change here. Like in the Aadhaar number section 139AA. So in case of the Aadhaar number section, what happened? Okay, you know that earlier, before 1st October 2024, it is allowed, okay, if you made application for the PAN number, then instead of the Aadhaar number, you can give the enrollment ID also. But that enrollment ID system is discontinued from the 1st October 2024. Means on or after 1st October 2024, you are applying for the PAN number, then you have to give the Aadhaar number only. Enrollment ID is not allowed. But guys, earlier, like there may be possibility that earlier PAN number was allotted on the basis of enrollment ID of Aadhaar. So now you have to intimate the Aadhaar number to the income tax department, and in income tax department that authority is a DGIT or PDGIT system up to the 31st December 2025. So this provision says that suppose if your PAN number is allotted on the basis of the enrollment ID of the Aadhaar number, in this particular case you have to intimate your Aadhaar number to the income tax department up to 31st December 2025. Done. So this is the section 139AA change. Now guys, after that there is a one change in the section 139A, that is related to the updated return. Now guys, if you remember, in case of the updated return, till what time you can file the updated return? So earlier that updated return allowed to file within the 24 month from the end of the relevant assessment year, and you have to pay the extra, that 25% or 50% was extra tax and interest. But guys, now this time limit has been raised to the 48 month. Now updated return can be filed, updated return. Now guys, updated return can be filed within 48 months from the end of the relevant assessment year. So after the assessment year, it can be filed within the 48 month, guys, 48 month. So here updated return, that is the ITRU, can be filed within the 48 month after the end of the relevant assessment year. So suppose for your examination, your previous year is 25-26, your assessment year is 26-27. So here assessment year will be end by 31st March 2027. After that, within the 4 years, you can file the updated return. So till 31st March 2031, you can file the updated return. But guys, here remember, if you file the updated return within the 1 year after the end of the relevant assessment year, means till 31st March 2028, then guys, you have to pay the 25% extra. After 1 year, but within the 2 years, then guys, 50% extra. Now this is the new. Means after 2 years, but within the 3 years, then you have to pay the 60% extra. And guys, after 3 years, but within the 4 years, then you have to pay the 70% extra. So guys, here, like whatever the tax and interest on that, additionally you have to pay the 25%, 50%, 60% or 70%. Within 1 year from the end of the relevant assessment year, then 25%. After 1 year within 2 years, then 50%. After 2 years within 3 years, then 60%. And after 3 years within 4 years, then 70% you have to pay extra. Done. Okay guys, now one more point is this is the amendment. So here it is given on this particular page. If you see, so the 60% and 70%, that is the new things here. Done. Okay, now guys, after that there is a one change in section, processing of return 143(1) is the intimation. So guys, when you file the return, then you know that your return is forwarded to the CPC Bangalore, and CPC Bangalore, Central Processing Center, used to do the 5 changes in your return. One is the arithmetic error, one is the incorrect claim, one is the, if you file the late return, then that losses will be disallowed, Next is, suppose for an example, a chartered accountant disallowed certain expenditure or included income in your income and you have not considered in the return of income, or guys, if you are claiming the income based deduction and return is not filed on the time, so in this particular case, that changes are made in the intimation by the income tax department. Now there is a one more addition from this year, and that addition is, if there is an inconsistency in the return with respect to the information in the return in any preceding previous year. So guys, there is an inconsistency in the information filed by in the earlier return and in the current return. So, and that will be prescribed by the income tax authority. So in the future, income tax authority will prescribe. In the future, income tax authority is going to prescribe what is the meaning of the inconsistency. So here they have added one point, inconsistency in the return with respect to the information in the return for any preceding previous year. But what do you mean by the inconsistency? That they will explain through the like notification. So through notification they will prescribe what is the treated as inconsistency. Done. Okay, now guys, one more point is, you know that in the there is a one more point in case of the dispute resolution panel. Now guys, dispute resolution panel is still, it is a face to face, it is not a faceless. But till the last year, you know that they have mentioned that till 31st March 2025 they will issue the they will issue the scheme, and according to that scheme, that dispute resolution panel system will be totally faceless. Guys, that date has been removed. That date has been removed, 31st March 2025, that date has been removed, and now guys, they will prescribe that scheme, but that date is not mentioned. So within some time they will prescribe the scheme. Okay, after that guys, 147 is related to the income escaping assessment. As such, there is no change in this particular part, but guys, you know that on this page, in this book, this is given what happened in case of the 147 before the 1st September 2024 and on or after 1st September 2024. This table you can ignore, because for the last year it was more relevant, but now it is not relevant, because this year, if the raid is conducted, then directly assessment will be in the block assessment. Okay, now guys, after this part, block assessment. In the block assessment they have changed everything. Block assessment, they have changed everything. Okay sir, how assessment will be done in case of the search cases. So suppose search or raid is conducted, then how assessment will be done. So that is your special provision, that is the chapter number 14b. Guys, chapter number 14b, there is a lots of amendments. So do one thing, for this particular chapter I will upload the whole lecture of the 1 hour 30 minute. So 1 hour 30 minute I will upload the lecture after this lecture, today only. So after this lecture I will just add the total lecture on this particular part, so you can understand nicely how assessment is made in case of the block assessment, or suppose raid is obviously raid is conducted, then how this block assessment will be done. So I will upload this part in the from the regular batch. Okay, so guys, after that, in the revision topic, as such there is no amendment. In the revision topic, as such there is no amendment in the revision topic. Appeal and revision. After appeal and revision, guys, in the dispute resolution, no amendment. In the miscellaneous provision there is an amendment. Okay guys, you know that suppose if you take the cash loan or repay the cash loan, or if you accept the more than 2 lakh rupees in a day in the cash, then there are certain penalties. There is a violation of section 269 SS, 269 T, 269 ST, and there is a penalty. Earlier that penalty was imposed by only joint commissioner. Now guys, they have changed, and from 1st April 2025 this penalty can be imposed by any assessing officer. Any assessing officer means this penalty can be imposed by the ITO also. Answer is yes, this penalty can be imposed by the ITO also. This penalty can be imposed by the AC, assistant commissioner, or deputy commissioner. So any of the officer can impose this particular penalty. Done. So here this is the one change, as well as the in the next section also there is the same change, as well as the in the next section also there is the same change, and as well as the in the next section also there is the same change. So from 1st April 2025 this penalty can be imposed by any assessing officer. Okay, done. After that guys, in the penalty topic, you know that there was one earlier penalty 271 AAB. Now guys, that penalty has been removed. That is not relevant for your examination. So if you have written there this penalty, then that penalty has been removed. One more point guys, that equalization levy topic has been removed. equalization levy topic. Earlier that equalization levy was applicable, but now equalization levy is not applicable. So equalization levy topic has been removed. Done. Okay. Now here also, like earlier it was the JC, now it is any AO can impose this type of penalty. Done. Okay. Now after penalty and prosecution in the black money, there is no change. In the GAR topic, there is no change. In the VDA topic, there is no change. Exempt income, there is no change. In case of the tonnage taxation, there is a small change. And that change is guys, earlier that tonnage taxation is applicable only in case of the ship. Now they have added here inland vessel also. So everywhere, wherever ship was written now, so after ship they have added the inland vessel. So any like sea-going ship, vessel or inland vessel. So everywhere they have added the, wherever like ship was written now, just they have added the inland vessel also. So tonnage taxation is applicable in case of the inland vessels also. Done. After that, in case of the trust, there is a small change, guys. In case of the trust topic, there is a small change, and that small change is, guys, normally what happened, suppose for an example, for any trust, one is the your provisional registration. That provisional registration is applicable for 3 years. That provisional registration is applicable for 3 years. And guys, after provisional registration, you have to go for the final registration. Final registration is applicable for 5 years. But guys, here one amendment made by this year, okay, guys, suppose if that trust last 2 years gross receipt before claiming that exemption under section 11, 12 and all, if not more than 5 crore in the last 2 years, in simple word I can say that there is a small trust, then guys that final registration is that registration will be granted for the 10 year instead of the 5 year. So here what this point says that if trust apply for registration other than provisional registration and its total income before giving the exemption under section 11 and 12. So before giving the exemption under section 11 and 12 does not cross the 5 crore in case of each of the 2 previous years just before the previous year in which application is made, then approval or registration will be valid for the 10 year instead of the 5 years. So here this is applicable for 10 year instead of the 5 years. So that is one small change. Okay, in the trust topic. After that, guys, in the trust topic, there is one more change, that relative of the trust definition has been changed. You know that earlier that what was the definition of the relative for the trust? So if you remember, then guys, for the relative of the trust, like if any benefit is provided to relative of the trust, then that benefit value will be taxable in hands of trust at the rate of the 30% under section 115 BBI. Now earlier that relative means any founder or author, or second is written any substantial contributor, and substantial contributor means contributor who made the donation of more than 50,000 in the previous year. Now guys, that has been changed. Here the substantial contributor means in the current previous year, either that donation is more than 1 lakh by that person, or till the end of the current previous year, if that aggregate donation is more than 10 lakh, then guys that person will be treated as the specified person, or you can say that the relative of the trust. Then that person will be treated as the specified person, or you can say that the relative of the trust. So in simple word, guys, here trust relative, if any person made the contribution or donation in the current previous year is more than 1 lakh rupees, or in the aggregate in the last years as well as the till the end of the current previous year, if aggregate is more than 10 lakh rupees, then that person is treated as relative of the trust. So here relative of the trust means in the current previous year either donation is more than 1 lakh rupees, or aggregate till the end of the current previous year, if it is more than 10 lakh rupees, then that person is treated as the relative of the trust. Done. That is 1, 2, 3 changes in the trust topic. And guys, after this in the tax audit, there are minor changes, but obviously when you will read the clause, then obviously many times it is not possible to remember. So here, like in the clause number 12, they have added the 44 BBC. So that is one point they have added here. So guys, that small changes here. So obviously it is not possible to remember every clause, but little you can remember. Done. Okay. After that, guys, in the transfer pricing, there is a one change, and that change in section 92 CA. And what is the change? Try to understand. In the transfer pricing, guys, there is a change, and that change says that, okay, guys, if you remember, then in the 4 cases, your transfer pricing, arm length price will be determined by the assessing officer in the 4 cases. Which 4 cases? One is the assessee not followed the most appropriate method. Second is that data is not reliable and correct. Assessee not furnish the documentation, TP study report, or assessee not maintain. Then your arm length price will be determined by the assessing officer. Now, actually, assessing officer don't determine the arm length price. Your arm length price calculation is referred to the TPO, transfer pricing officer. So guys, here they have made one amendment. Suppose for an example, if your case is transferred to the TPO and TPO find out your arm length price, TPO determine this arm length price, then guys, you have an option. Then you can apply this methodology of arm length price or that arm length price for the next 2 years also. So for an example, your case for the assessment year, suppose for the assessment year 22-23 went to the TPO and TPO find out your arm length price. So guys, that arm length price, you have an option that you can apply for the assessment year. You can apply for the assessment year 23-24 as well as assessment year 24-25 also. So this arm length price can be applied for the pre-assessment year 23-24 and assessment year 24-25 also. But guys, there are certain conditions. So if arm length price is determined by the TPO, then that arm length price, you have an option that you can apply. You can file the, there will be a form and you can file that form and you say that I want to apply this arm length price for the next 2 years also, then it is applicable. So here, once the TPO determine the arm length price under this section, then same arm length price can also be applied to the next 2 years if 4 conditions are satisfied. 3 conditions. One is the assessee choose this option for both the years. Option has to be filed in prescribed form, manner and on the time that they will prescribe, income tax department will prescribe, and TPO confirm in writing within the 1 month from the end of the month in which option is exercised that the option is valid. But guys, this option is not applicable when search is conducted. So suppose search is conducted, raid is conducted, then this option is not applicable. Next point says that once the option is valid, then arm length price fixed by TPO will also apply for the next 2 years. And the AO will recompute the income accordingly within the 3 months from the end of the month in which assessment is completed. So guys, when assessment is completed, now after completion of assessment within 2 months, AO will recompute the income for the next 2 years also. Suppose for next 2 years you have filed the return or assessment is done, then there will be a recomputation within the 3 months from the end of the 3 months from the end of the month in which assessment is completed. So this is one amendment. Okay guys, now there is a safe harbor rules, and safe harbor rules, I feel that is the most important for your examination. So safe harbor rule is software development service, IT enabled service, core auto component, non-core auto component, manufacturing, export. So guys, I am thinking that I will give you the total safe harbor rules lecture. So total complete lecture of the safe harbor rule I will upload with this lecture only, so you can get the good clarity on the safe harbor rule also. Done. So this is the section 92 CB done. After that guys, after that in the transfer pricing there is no change. In the non-resident taxation also guys, this time there are some minor changes, not that much changes. One change is in this some exemption section that date has been changed. Some exemption section that date has been changed. So one is the guys, in the section 9A there is a some small changes, so that you can do yourself, there is no issue at all. After that guys, in the section 10(4)D, what is the meaning of a specified fund? And in the definition of a specified fund, here investment division of offshore banking unit means the investment division of banking unit of NR located in IFSC. Here that date has been changed to 31st March 2030. I think it was earlier 31st March 2025. Now this date is still 31st March 2030. Now in the next section guys, here that counter derivative is added in the section 10(4)E. So in the 10(4)E they have added here counter derivatives, and here they have added foreign portfolio investor of the IFSC. Now in the section 10(4)F also that date has been changed to the 31st March 2030, as well as in the 10(4)H guys, 10(4)H also that date has been changed to 31st March 2030, and they have added the ship also. Earlier it was only aircraft, now they have added here ship also in this particular section. And in the same next section also they have added the ship here. Done. So these are the correction. Okay, now guys, in the 1023 FE, if that Abu Dhabi investment, that Abu Dhabi government, if they invest in the infrastructure in India and all, so guys, there also earlier that date of the investment, that investment should be made, that date was till 31st March 2025. Now this date has been changed to the 31st March 2030. So this date has been extended till 31st March 2030. And they clarify that, okay, here if any LTCG is exempt, interest is exempt, dividend is exempt, and LTCG means here whether or not such capital gain deemed to be STCG under section 50AA. So even it is a 50AA deemed STCG, then also like whether or not such capital gain is deemed under section 50AA, then also that will be exempted if it is a LTCG. Done. So one clarification given here. After this, guys, there is a TK. Okay, in the non-resident taxation, guys, under section 115 AD, there is a one small changes. 115 AD is related to FII. In case of foreign institutional investor, FII, in the last year, what happened? There was one mistake in the law. And in the mistake in the law and under section 115 AD, what they did, you know that they mentioned that suppose if 112A is applicable, then tax rate is at 12.5%. But suppose 112A is not applicable and there is a long-term capital gain on the other security, then the tax rate was 10%. That was the inadvertent mistake by the lawmakers. Now that mistake is corrected. Now LTCG is 12.5%. So if there is a long-term capital gain on the security, then guys 12.5%, and if it is a 112A, then obviously it is a 12.5% in excess of the 1,25,000. Done. So guys, this is the completion of your non-resident taxation. In the other topic of the non-resident, guys, there is no such changes, no change. So guys, after this particular lecture, yes, on the last part of the book, there are some case laws are given that you have to refer, obviously. And guys, there are some concept is given. One is the this CBDT guidelines related to the compounding of offense. Guys, just do this guidelines. You can do this guidelines yourself. And guys, there is a one MCQ given in our MCQ booklet. So in the new MCQ booklet, one MCQ is given. So that MCQ you can find on this particular part. Okay. And guys, the last part is related to the safe harbor rules. So for safe harbor rules, I am uploading the lecture along with this lecture only. So you can complete the safe harbor rules. So guys, now after this, there will be two full-fledged concept lecture. One is related to the raid cases block assessment and one is related to the safe harbor. Done. So thanks a lot, people. That's enough for today from my side. All the best for your examination. Give your 100%. And guys, now this is the last of your Income Tax Act 1961. From the next year, Income Tax Act 2025 will apply. Everything will going to change. So guys, just focus to this and just complete your examination in your targeted exam. Okay, done. Thanks a lot, people. Bye. Let's start with the one last assessment. And today we are going to start with the last assessment. As of now, if you remember, we have completed the three type of the assessment. One is the section 143.3 was related to the scrutiny assessment. Scrutiny assessment. 144 is related to the best judgment assessment. And guys, 147 is basically your income escaping assessment. Income escaping assessment means when assessing officer is having the information that your income has been escaped from assessment, then guys, he has to follow the procedure given under section 148A subsection 1. He will issue the show cause notice. After that, you will give some submission. After that, he will pass one order under section 148A subsection 3 that your case is a fit or not fit. So guys, this three assessment we have already completed. Now today we are going to start with one very interesting concept, an interesting assessment. So guys, today we are going to start with section number 158BA to section 158BFA. So basically there are certain sections in this chapter, and guys, here this is the one different chapter in the income tax law, and that chapter number is basically chapter number 14B. and this chapter is applicable with effect from 1st September 2024. And this is the basically assessment in raid cases or search, basically we call it search. In practical life, people call it income tax raid, but obviously in the examination, you have to write the search and seizure. So in case of the search and seizure, how assessment will be conducted, that is given in the chapter number 14B. This chapter is applicable with effect from the 1st of September 2024. Now, sir, what before 1st September 2024? Then guys, you know that before 1st September 2024, that assessment in such cases used to be they always assessment in the such cases was made under section 147, that income escaping assessment, but now there is a separate procedure. Now there is a different sections and all. So let's start with this particular chapter, that is the 14B. So guys, here lawmaker says that suppose in case of assessee, if there is a search under section 132 or there is a requisition under section 132A. Now, if there is a search under section 132 or requisition under section 132A, search, we have studied the section 132, if you remember. Then, sir, when search can be conducted, you know that search can be conducted in the two cases. One is if you have not complied with the 142(1) RIA notice, or you have not complied with the 131 summon, or suppose if they issue, then if they might issue, then you will not comply with this particular notice, or guys, in your possession there is some money, bullion, jewelry, another valuable article and things that has not been disclosed in the income tax, or you are not going to disclose in the income tax. So in that particular case, search can be conducted. Now guys, if search is conducted on or after, if search or requisition is made on or after 1st September 2024, then guys, the assessment will be done under section 158BC. Under section 158BC, and under section 158BC, there will be the block assessment. Now, what is the meaning of block assessment? I will explain you. So here there will be a block assessment under section 158BC if raid is conducted or requisition is made under section 132A on or after 1st September 2024, then there is a block assessment. Now question is that what is the meaning of block assessment? So guys, suppose for an example, there is one assessee, and in case of the assessee, suppose search is started on 10 December 2025. Suppose search started on this date and search completed means that panchnama drawn. So search completed on 15th of suppose December 2025. So there were 5 days search. Now lawmaker says that search is started on 10 December 2025 and search completed on this particular date. Then what will happen? You know that lawmaker says that just ignore the year in which search is started. So search started in the previous year 25-26. Just ignore this period. And guys, just take the last 6 assessment year. So in simple word, here search started in the previous year 25-26. Then just ignore the previous year 25-26, and here guys, previous year 24-25, previous year 23-24, previous year 22-23, previous year 21-22, previous year 20-21, and previous year 19-20. Or if I consider as an assessment year, then assessment year 2021, assessment year 21-22, assessment year 22-23, assessment year 23-24, assessment year 24-25, and assessment year 25-26. So this is called 6 assessment year. Now here search is started on 10 December 2025. So this is the search is started in the previous year 25-26. Just ignore this year. And guys, the last 6 previous year. So here this last 6 previous year, AO will ask you to file the return of the last 6 previous year. Now here you have to file the return of the last 6 previous year. So in simple words, search is started on this date. Then guys, just for the last 6 previous year, you have to file the return. Sir, we already filed the return for the last 6 year. Then also again we have to file the return of the last 6 years. Answer is yes, guys. And there is a one ITR that is called your ITRB karke. I will explain you. I will show you the ITRB. So what will happen? AO will ask you when search is completed. After search completion, AO will ask you to file the return of the last 6 assessment year. And guys, along with that, your block period will be, so your block period is the last 6 previous year plus 1st April of the year in which search is commenced. So 1st April 2025 till the search is completed. So 1st April 2025 is basically year in which search is started till the completion of the search, that is the 15th December 2025. Guys, this whole period will be known as the block period. So if anyone asks you what is the meaning of the block period, and this is the one MCQ they ask in the examination, I think in the last examination they asked this MCQ, what do you mean by the block period? So guys, here block period means search started, just take the last 6 previous year. So last 6 previous year, and guys, previous year in which search started 1st April of that previous year till the date of the completion of the search. This period is known as the block period. And guys, here assessment will be made by AO for whole this block period. Means for this particular block period, AO is going to complete the assessment. And guys, in this assessment, whatever your undisclosed income on that undisclosed income, there will be the tax at the rate 60% is the tax. 60% is the tax, and along with that there will be a penalty of the 50% of the 60%. So in simple word, you can say that you have to pay the 90% to the government. Other than this, there will not be any penalty and all. So lawmaker says that suppose search is conducted in case of SSC. So if search is conducted in case of SSC, in this particular case, there will be an assessment for the block period. Now, what is the meaning of the block period? So guys, here block period means like search started in this year, then just as of now, ignore this year, last 6 year. Plus the 1st April of previous year in which search is started till the date of the completion of the search. Till the date of the completion of the search means last authorization is made, or in simple word I can say that Panchnama is drawn, that is called search completed. So guys, this period is known as the block period. And guys, here AO will charge the tax on this block period. If there is any undisclosed income, then on that undisclosed income there will be a tax rate at the rate 60% and penalty is required to pay at the rate 50%. So undisclosed income is 60% and penalty is 50%. Undisclosed income is 60% and on that there will be a penalty of the 50%. So undisclosed income, tax is 60% and penalty is 50%. In simple word, I can say that you have to pay the 90% to the government if there is an undisclosed income during this particular block period. Guys, now here you have to file the return also. Here you have to file the return. Guys, when assessment, when search is conducted, then after that AO will issue one notice and AO will ask you to file the return of the last 6 previous year. AO will ask you to file the return of this particular block period, and there is a one written form that is called ITRB. Let me show you ITRB PDF. So they have designed one new ITR, that is ITRB. So ITRB, that is the chapter number 14B. Let me show you. So this is the ITRB, block period, ITRB. So this is one return that you have to file when raid is conducted. So here guys, this is the ITR form, ITRB, we call it form number ITRB. Income tax return for the block assessment for search and seizure cases, chapter number 14B, section 158BC, subsection 1, clause number A, read with rule number 12AE of the income tax rules 1962. So guys, here like general information, PAN number of SSC, after that your date of birth, or in case of the company incorporation and all, Aadhaar number if it is applicable, after that your all detail and all, and after that guys, here you have to mention about the block period. So first is here like date on which the first search authorization or requisition is made, means when search is started. Second is date on which last of the search authorization under section 132 executed or requisition under section 132A is made. So that is the, you have to give that when search is started, when search is completed. Now block period, here you have to mention the block period, so last 6 years and on the date on which that search is completed, so that will be your block period. Now return file in response to, if you are filing the return in response to notice under section 158BC or not, so under section 158BC only AO will issue you one notice and AO will ask you to file the return of the block period, so you have to file the return in the block period. Now guys, there is a one more section, that is 158BC, but in pursuant to section 158BD. Now what is the 158BD? I will explain you here. Okay, now next part is enter the unique number, documentation, identification number, due date of filing of return of income in response to notice under section 158BC. Now next is assessment year, that is earlier assessment year comprise in the block period. So here guys, for the all 6 year detail you have to given, like here that is the year 6, that is earliest assessment year comprising in the block period. In that year enter the date of filing of the last return, means you have filed the return of that year or not, under which section you have filed the return of that year. Sir, enter acknowledgement number of that return, or any assessment or reassessment or recomputation is pending for the year under consideration as on the date of initiation of search or requisition, if any assessment is pending or not. So guys, that you have to mention, that is for year 6, after that year 5, after that year 4, after that year 3, year 2, year 1, everything you have to mention here. After that also you have to give the detail of those year, okay, like in those year what is the like income and all, everything you have to mention here. So this is the basically guys a return they have drafted, that is called ITRB. Now let's discuss this concept from our book. So what is written in your book? Just check your compact, and in the compact I think this is given on the page number, block assessment is given on the page number 262. Very interesting part. In examination you may get some MCQ from this part. So here a special procedure for assessment in such cases, that is chapter number 14B. It is added from the 1st September 2024 by the Finance Act 2024. So last year they have added this particular topic, particular like chapter in the income tax law, and there are lots of amendment from this year. So here, so under this particular provision, we will discuss the various section. One is the section 158BA. So 158BA is related to assessment of total undisclosed income as a result of search, how assessment will be done. 158BB is a computation of total undisclosed income of block period, how we will compute the total undisclosed income. 158BC is basically your procedure for block assessment. So here AO will issue the notice to file the return, means AO will ask you to file the return of the block period, that is the ITRB you will file. Second is he will assessment of the total income, and after that he will passing the assessment order. So 158BC is basically AO will ask you to file the return of the block period, after that he will compute your total income, and after that he will complete your assessment. So here 158BC is main section, here assessment will be done. Now 158BD section says that undisclosed income of any other person. Suppose raid is conducted at your place, but there is some information, some documents, some assets belongs to some other person. Then guys, that in case of other person also, if there will be an assessment under this particular chapter, answer is yes. So that we will discuss in the section 158BD. After that, section 158B is a time limit to complete the block assessment. Till what time they will complete the block assessment, and BF is certain interest and penalty is not applicable. So when under this section, if you pay the tax as well as the penalty, then other penalty and all is not applicable. And guys, penalty in the such cases is a 50% of the tax. Here tax rate is 60% and penalty on that 60% is a 50%. So 90% you have to pay to the government on the undisclosed income. So let's start by one section. So guys, what section 158BA says? 158BA is the first section. This section says that assessment of total undisclosed income as a result of the search, or we call it raid in the practical life. This provision says that where a search is initiated under section 132 or requisition is made under section 132A on or after 1st September 2024, in respect of any person, the assessment of such person shall be governed by the provision of this particular chapter. Now what point number 2 says? Point number 2 says that what will happen here? So guys, here AO shall issue a notice to such person. So AO shall issue a notice to such person requiring him to furnish within such period, but maximum he will allow the 60 days. Maximum he will allow the 60 days as may be specified in the notice to file written in the form number ITRB setting forth his undisclosed income for the block period. So guys, here what will happen? When search is conducted, then here AO will issue one notice and AO will ask you to file the written in the form number ITRB within the time limit given in that notice. So normally AO will give you 30, 40, 50 days, but maximum AO will allow the 60 days to file the written. Now guys, like AO will give you one opportunity in simple word. Okay, just disclose your undisclosed income because raid is conducted, search is conducted. So now you disclose your undisclosed income now. So whatever your undisclosed income, you file in the return of income. So that is, you can say that one opportunity karke, okay? Because there will be one benefit when you will disclose the undisclosed income in this particular return in the ITRB. Then there will be a one benefit. What is the benefit? I will explain you. So here again I am reading this point. AO shall issue a notice to such person requiring him to furnish within such period, but maximum 60 days, as may be specified in the notice written in the form number ITRB setting forth his undisclosed income for the block period. So this is given in the section 158BC. So he will issue you a notice under section 158BC under subsection 1 and he will ask you to file the return of the block period. Now next part, what will happen? Next point, very interesting. Provided that such return shall be considered as return furnished under section 139 and notice under section 142 shall thereafter be issued. So there is a one standard practice they will follow here. What will happen? Okay guys, when you file the return under ITRB for the block period, then when you file the return, then within the 3 months from the end of the financial year in which you file that return, they will issue you one notice under section 143(2), that is for scrutiny notice. Here assessment will not be made under section 143(3). Here what will happen, you know that they will make the assessment under section 143(3) or 144, but read with this particular chapter. Here they will write read with section 158BC. Why they are, you know that in the yesterday's lecture I explained that under section 147 also, when you file the return in response to notice under section 148 then after that they will serve you the notice under section 143(2). Why 143(2) notice is required? To give your attention or your personal hearing is required. Some clarification, document, evidences is required. So for that purpose, they will issue you the notice under section 143(2). 143(2) is basically notice for a scrutiny assessment. Here assessment will be made under section 143(3) or 144, but always they will say that read with section 158BC. So here again I am reading this point. So what will happen? Provided that such return shall be considered as return furnished under section 139 and notice under section 143(2) shall thereafter be issued. Now next point. Notice under this section shall be issued by AO with the prior approval of the additional CIT, additional DIT or JC or JD. So guys, here when notice is issued to file the return for the block period, this notice will be issued by AO but with the prior approval of the highest level of the AO. Now suppose joint commissioner, joint director, additional commissioner, additional director, they are also assessing officer. If they are issuing the notice, then obviously there is no need of any approval. But guys, if ITO or ACDC is issuing this notice, if ITO or ACDC, because ITO and ACDC is a lower level officer, assessing officer. So if ITO or ACDC is issuing this particular notice now, then they need the approval from the JC or JD or additional CIT or additional DIT. You got my point or not? Yes. Now next part, provided further that any ROI furnished beyond the period allowed in the notice shall not be deemed to be the written file under section 139. So guys, suppose they have allowed you to file the written within the 40 days, you file after 40 days. So in that particular case, that written will not be considered as written file under section 139. It means that written can be rejected also. There may be possibility they will not consider that written. Now next part. No notice under section 148 is required to be issued for the purpose of proceeding under this chapter. It's very simple. Okay, guys, notice under section 148 is not required here. Notice under section 148 is required when there is an income escaping assessment under section 147. Yesterday we have completed that. So guys, here no notice is required under section 148. Now next part. Provided also that the person shall not be entitled to furnish a revised return. It's very simple. Okay, this return, suppose if you file the ITRB, so question is that can we revise the ITRB? Answer is no, because return can be revised only if that return was filed under section 139(1) or 139(4). If return is filed in the ITRB, then obviously that return cannot be revised. Now next part. Provision of section 143(1) shall not apply to the return furnished under this section. So guys, when you file the ITRB now, then after that is there will be an intimation? Answer is no. There is no intimation. That intimation is not received, guys. 143(1) provision is not applicable. Now guys, there is a one point. This point says that time allowed to furnishing a return may be extended by further period of the 30 days where these four conditions are satisfied. So if these four conditions are satisfied now, then AO can allow you the 30 extra days to file the return. So normally AO will give you the time, like that may be 30, 40, 50 days, but maximum AO can allow the 60 days. But guys, this time limit can be extended by the 30 days in the if four conditions are satisfied. Now, what are the four conditions? Try to understand. First is, the due date of the last year return had not expired when search or requisition is begun. So due date for the last year return has not expired when search or requisition begin. Second condition, assessee was required to get account audited under section 44AB. Third is, accounts were not yet audited on the date of the notice. And guys, assessee makes a written request for extra time to complete the audit. So for an example, I can take an example. Okay, guys, your last year was previous year 24-25. Now, suppose search is started on 19th of July 2025. On this date, search is started. So can I say that this last year and last 5 years will be covered in the block period? But guys, for this particular year, your return filing due date has not been expired now, because this year your return filing due date will be in the 31st October. If there is an audit assessee, then 31st October. So on the date of the search, guys, on the date of the search, when search is started, on that date, the last year return filing due date has not been expired. So here, four conditions. First is the last year due date has not been expired on the date of the search. So search is started on 19 July 2025. On this particular date, last year return filing due date is not expired. Second condition, assessee was required to get account audited under section 44AB. Tax audit is applicable. Third is, assessee were not yet audited on the date of the notice. When department issue you the notice to file the return of the block period, that time your accounts are not audited. And last condition, assessee makes a written request for the extra time to complete the audit. So in this particular case, AO may allow you the further period of 30 days to file the return. So guys, normally what happens, suppose if your search is conducted, then AO will ask you to file the return for the block period. But guys, what time AO will provide? So AO will give you the time, that time will be written in the notice. It may be 30, 40, 50 days, depends. But maximum time can be the 60 days. But guys, whatever time given, that can be further extended by the 30 days if 4 conditions are satisfied. First condition, that last year return filing due date has not been expired on the date when search is started. Second condition, IFSC books of accounts are required to be audited for the last year. Third condition, on the date of the notice, like audit is not completed. And last condition, IFSC requested that, sir, please give me the extra time to file the return in the ITRB. In this particular case, AO will allow you the further period of 30 days to file the return. Now next part, all people focus here. What is the meaning of the block period? So here block period means period comprising previous year relevant to the 6th assessment year preceding the previous year in which search was initiated under section 132 or requisition was made under section 132A. So when search is started or requisition is made, just ignore that year and last 6 year, and also include the period starting from the 1st April of previous year in which search was initiated or requisition was made and ending on the date of the execution of last of authorization for such search or such requisition, means 1st April of previous year till the completion of the search. That will be treated as your block period. Now guys, last of authorization shall be deemed to be have executed in case of search when last panchnama has been drawn, and in case of requisition when receipt of the books of accounts are assessed by the assessing officer, then we can say that search is completed or requisition is made. Now next part, if search is initiated on 30th September 2025 and concluded on 5th October 2025, then guys your block period will be from previous year 1920 till the previous year 24-25 and the period from 1st April 2025 till the completion of the search, that is the 5th October 2025. Done. This is the point number 3. Now next point is a point number 4 in this section. What this point says, try to understand. This point says that any assessment or reassessment which is pending on the date of initiation of search or requisition in relation to the last 6 previous year, it is going to be abate. What is the meaning of the abate? What is the meaning of the abate? Abate. What is the meaning of abate? Abate means tell me what is the meaning of abate? Abate means, so guys, tell me now what is the meaning of abate? So guys, this is the last 6 years. Now what happened guys, when search is started on that date, suppose for this particular year one assessment under section 143(3) is pending. Assessment under section 143(3) is pending. So 143(3) assessment is pending for previous year 23-24. Now guys, for this particular year, suppose 147 is pending. Pending means it is going on. And guys, for this year, suppose there is a one appeal pending with ITET, Income Tax Appellate Tribunal. So what happened? For this particular year, assessment is pending under section 143(3). For this year, 147 is pending, and this year one appeal is pending with the ITET. Lawmaker says that in this 6 year, suppose if your assessment or reassessment is pending, then it is going to be abate. It is going to abate means it will stop there. It will stop there and your assessment will be completed with block period. So in simple word, I can say that guys, assessment is pending for this particular year. It is going to be abate. Abate means it will stop here. This assessment will stop here. 143(3) will stop here. If 147 is pending, then it is also going to abate. So here 147 is going to abate means stop here. But guys this appeal is pending with the ITED, it will be continued because only assessment or reassessment is going to abate. Because here now your assessment will be made under section 158 BC na. So your assessment is going to be completed under section 158 BC for this particular block period. So for block period, now there will be assessment under section 158 BC na. So guys, if assessment is pending in the last 6 years, then guys this assessment is going to be abate, or abate means it is going to be stop here. Stop here. But guys, what happened? You know that. Suppose for an example, I can take an example. In the Tamil Nadu, there is a government or one more nowadays there is an election, I think after some time in the West Bengal, Kolkata. So what happened? Suppose Mamata Banerjee is from opposition party. So what happened? At the home of the Mamata Banerjee, suppose income tax raid is conducted. Now at the home of the Mamata Banerjee, income tax raid is conducted. Now that was due to the political reason, you know that. Political reason, raid is conducted at the home of Mamata Banerjee. Now in case of the Mamata Banerjee, this chapter will apply. For the last 6 years, Mamata Banerjee have to file the return. Now in this particular case, what happened? Mamata Banerjee, this assessment was pending. So when raid is conducted, means this assessment is going to abate, means it is a stop. But what happened? You know that Mamata Banerjee filed an writ petition to Calcutta High Court. Mamata Banerjee filed a writ petition to Calcutta High Court, and Mamata Banerjee says that this our home minister and this finance minister and prime minister and all, and they did the raid at my home only due to the political reason. So High Court also find that at Mamata Banerjee home they have not recovered any cash or money or bullion or jewelry or any other valuable article and things, and there is no undisclosed income. And also in this particular case, what happens? Suppose High Court directed whatever raid you have conducted, that is cancelled. That raid is cancelled. So if raid is cancelled by the High Court, then guys, this assessment which was abate on the date when search was conducted, so this assessment will be again revived. Again this assessment will be alive, it will be revived, and assessment will be conducted under section 143(3) and 147. So this concept is very simple. Suppose search is conducted, then your assessment will be for the block period. So in block period, if assessment is already pending, any other assessment is already pending, then guys, that assessment will be abate. But guys, suppose in the future, what happened? Your raid is declared invalid by the court or authority. In this particular case, that abated assessment will be revived, and again assessment will be completed in that particular section only. You got my point or not? Yes. Okay, so let's focus here. What is written here? Again, read this point number 4. Point number 4 says that any assessment or reassessment which is pending on the date of initiation of search or requisition in relation to the such last 6 previous year shall be abated. Now here one amendment, and what this amendment says: if any notice for assessment is issued after the date of search but before completion of block assessment, that proceeding shall also abate except for the year of the last search authorization. So guys, what they are saying? They are saying that okay, in the last 6 assessment year, whatever assessment is pending, that is abated. Now guys, when search is started, but still assessment under block assessment is not completed. But before block assessment completion, if for this year, suppose one notice is issued under section 143(2), means after starting of the search, but before completion of the block assessment, if any notice is issued for this year, then this assessment will also be abated. So here this assessment will also be abated. So guys, what first I am saying that on the date of the search, so when search is started, means raid is started. For an example, guys, in our example, let me explain you here. On this particular date, suppose raid started on this date, 10 December 2025. So on this date, whatever the assessment pending for this 6 assessment year, then guys, that assessment will be abated. That is very clear. Now what happens, search is started, but on this date for this year there any notice was not issued, no assessment was pending. But guys, what happened on the 7th of Jan 2026, suppose AO though issue the notice under section 143(2) for this particular year. Now sir, on the date of search that assessment was not pending, but here after completion of search, but before completion of assessment, before completion of block assessment, if any notice is issued for this year, and now guys this year assessment is also pending under section 143(3). So question is that is it will also be treated as abate or not? Right answer is yes, it will also abate. It will also abate. But guys, there is a one exception, that is the if any notice is issued for the year of search. Year of search means that is the previous year 25-26. So this year, for this year, suppose in future, if any notice is issued under section 143(2) or 144 show cause notice or 148 notice for the assessment, then it will not abate. It will not abate. So in simple word, again I am repeating, okay guys, for the last 6 years on the date of the search, if any assessment is pending, that is going to be abate. But after search started, but before completion of the block assessment, if any notice is issued for this year for assessment, that will also abate. But any notice is issued for the year of the search, that year assessment will not be abated. Done. Again read this line, what this point says, try to understand. So here guys, again I am reading this point. Any assessment, reassessment which is pending on the date of initiation of search or requisition in relation to last 6 previous years shall be abated. If any notice for assessment is issued after the date of the search, but before completion of the block assessment, that proceeding shall also abate, except for the year of the last search authorization. Now guys, only assessment or reassessment shall abate. Any other proceedings such as appeals or revision which is pending shall not abate. Now next part. If in any case, if reference is made to TPO under section 92 CA, subsection, it should be 92 CA instead of 94 CA. It should be 92 CA, I think. Just write it 92 CA. Okay. So here, next point, if in any case, if reference is made to TPO, because TPO reference is under section 92 CA in the transfer pricing, not 94 CA, it is 92 CA, to the TPO by the AO and order passed by the TPO, such reference or order shall also abate. So guys, if you remember from transfer pricing, and in transfer pricing we have discussed that if AO, like in the 4 cases, AO can find out your arm length price. Which 4 cases? One is the if most appropriate method is not followed. Second is data is not reliable or correct, or documentation, that is TP study report, is not prepared, or suppose you have not submitted that TP study report. So in that particular case, like your case may transferred by the AO to the TPO. So suppose TPO case is transferred to TPO or TPO passed the order. So is that will also be abated or not? Answer is yes, that is also going to be abated. Now next part, point number 5. Point number 5 says that if any proceeding initiated under this chapter or any order of assessment, reassessment made under this section has been annulled in any appeal. Now guys, you know that it is annulled in any appeal means it is cancelled. It is cancelled by the court. It is the example of the Mamta Banerjee. So in case of the Mamta Banerjee, you know that it is cancelled. So in that particular case or any other legal proceeding, then abated assessment or reassessment shall revived with effect from the date of the receipt of order of such annulment by the CIT or PCIT. So in simple word, I can say that suppose if your assessment or reassessment made under this section or whatever search is initiated under this section, if it is cancelled, by the court and all, in this particular case guys, whatever your abated assessment, that is going to be revived. Now next part, provided that such revival shall cease to have effect if such order of annulment is set aside. Now guys, what happened here, if that order of the cancellation is set aside by the higher court, now high court says that okay, this rate is due to the political vendetta, High Court says that okay, this raid on the Mamata Banerjee is due to the political reason, but so abated assessment is revived. But again, at the Supreme Court says that no, raid was valid. So in this particular case, again that revived assessment will be abated. Again, that revived assessment will be abated. Done. Now point number 6 is interesting. Try to understand what point number 6 says. That point number 6 says that where any assessment of search case, that is the first search, is required to be made in case of assessee, in whose case the subsequent search, that is second search, is initiated or requisition is made. Such assessment, that is first search, shall be duly completed, and thereafter the assessment in respect of such subsequent search or requisition shall be made. Now, provided that time period for completing the assessment in respect of subsequent search is less than 6 months, such period shall be extended to provided that the time period for completing the assessment in respect of subsequent search is less than 3 months, such period shall be extended to 3 months from the end of the month in which the assessment in respect of the earlier search was completed. Now, what is the meaning of that? I will explain you. Guys, what happened? Suppose, for an example, there is a one person, name is Mr. Rajni. Now guys, here what happened in case of Rajni? In case of Rajni, suppose one search is started here on the 10th December 2025, 15th December 2025, search is completed. So guys, can I say that AO will pass the assessment order for this block period under section 158 BC, but still assessment is going on. You file the return for the 6th year of this block period and all, still that assessment is going on. But guys, what happened now? Suppose on the 18th of August 2026, again there is a search on the same assessee. Again there is a search, second search. It was the first raid. Now here on the 18 August 2026, there is a second search. Now when this second search is conducted on the 18 August 2026, then guys, the block period will change here, because here they will make the assessment of the previous year 25-26, previous year 24-25, 23, 22, 21 and 2021. So guys, this previous year has been changed here. Now question is that, sir, when first search is conducted but still assessment is pending, assessment is not completed, in the block assessment is not completed, it is going on, and now subsequent search is started. So question is that, sir, is we will merge it and make the one assessment, or assessment made separately? Right answer is assessment they will make separately, and they will first complete the assessment of the first search, and then they will start the assessment of the second search. So guys, here they are saying that suppose there is a subsequent search. So guys, first search is conducted and here they have to make the assessment of this block period. But guys, after that second search is conducted. So is they will merge it? Answer is no. There is no need to merge the assessment. First, they will complete the assessment in case of the first search. And when assessment is completed, after that, they will make the assessment of the second search. Now guys, for the assessment completion, there is a time limit that we will discuss. What is the time limit to complete the assessment in such cases? Guys, for the second search assessment completion, if AO is not having the sufficient time and AO is having the less than 3 month time to complete the assessment in second search case, then guys, AO will get at least 3 month time. AO will get at least 3 month time. So what this point says, that again read it, where assessment of such case, that is first search, is required to be made in case of assessee in whose case subsequent search, that is second search, is initiated or requisition is made, such assessment, that is first search, shall be duly completed, and thereafter the assessment in respect of the such subsequent search or requisition is made, provided that the time period for completing the assessment in respect of the subsequent search is less than 3 months, then such period shall be extended to 3 months from the end of the month in which the assessment in respect of earlier search was completed. So guys, in the second search case, if assessing officer is not having the period of 3 months, in this particular case, AO will get at least 3 month period from the end of the month in which assessment in case of first search is completed. Done. Now next point, what point number 7 says, try to understand. AO shall proceed to determine the total undisclosed income of block period in the manner laid down in section 158BB. So 158BB is a manner how AO will determine the undisclosed income. And the provision of section 142 is that RIA notice and like a case transfer for the special audit and all that we have discussed under section 142. 143.2 is scrutiny notice, 143.3 is scrutiny assessment, 144 bad judgment assessment, 145, 145A and 145B is related to the method of accounting, and there is some special income like in case of government grant is taxable in the year of receipt or accrual whichever is earlier. In case of export incentive will be taxable in the year in which reasonable certainty is achieved and all shall so far may be applied. So guys, that section will be applied while calculating the total undisclosed income. So while calculating the total undisclosed income, this section is going to apply. Answer is yes, it is going to apply. Now next part, all people focus here, point number 8. What point number 8 says? AO on determination of total undisclosed income of the block period shall pass an order of assessment or reassessment and determine the tax payable by him on the basis of such assessment or reassessment. So here AO will find out your total undisclosed income of the block period and shall pass an assessment or reassessment order and determine the tax payable by him on the basis of such assessment or reassessment. And guys, provided that nothing in the provision of section 144C apply in respect of such order. So guys, 144C is not applied, and in the 145C also I mentioned that if there is a raid cases assessment, then 144C is not applied. Now what is the section 144C? Is related to the dispute resolution panel. You know that like in two cases, one is the non-resident foreign company if there is a variance in the income, or due to the order of the like TPO, if your income is increased or losses are decreased. In this particular case, you know that AO has to serve you first the draft order. After that, either you will give the acceptance or objection with the DRP, and like I won that fish we made while studying that section. So that provision is not applicable. So in this particular case, guys, that provision is not going to apply. Now next part, point number 9. What point number 9 says? Point number 9 says that total income other than undisclosed income for the assessment year relevant to the previous year in which the last of the authorization of search is executed or requisition is made shall be assessed separately in accordance with the other provision of the act. So guys, here what they are saying, again read this line very carefully. Total income other than undisclosed income, so except undisclosed income for the assessment year relevant to the previous year in which last of the authorization of search is executed or requisition is made shall be assessed separately in accordance with the other provision of the act. So guys, they are talking about the current year. So current year is, guys, in this particular case, your search is started on this date, search is completed on this date. So search completed in the previous year 25-26. Now question is that, sir, for this year also, is assessment will be made under section 158BC only? Or this year assessment will be in the normal course? Because last 6 year assessment, because block period assessment will be under section 158BC. So here lawmaker says that, guys, for this year, other than undisclosed income, because if there is an undisclosed income, then it will be covered in this block period. And undisclosed income will be assessed under section 158BC only. But guys, current year normal. Give me a minute. Yes, guys. So I am saying that obviously for the last 6 years, there will be assessment under section 158BC, that is under section 158BC. Sir, question is that current year assessment will also be under section 158BC or under the normal section like scrutiny assessment or bad judgment or 147. That depends on case to case. So right answer is, guys, current year, that is previous year 25-26. Like 25-26, this year assessment will be in the normal course under section 143.3 scrutiny or 144 batch judgment assessment other than undisclosed income. So undisclosed income assessment will be with this block period only under section 158 BC. But guys, that whatever your normal regular income na, so that regular income assessment will be done under the normal provision of income tax, not under section 158 BC. So here again read this point, what this point says, try to understand. Total income other than undisclosed income for the assessment year relevant to the previous year in which the last of the authorization for search is executed or requisition is made shall be assessed separately in accordance with the other provision of the act. Done. Now guys, who will complete the assessment? So in the raid cases, there is a serious level of assessment. So here who will complete the assessment? So try to understand. So order of assessment for the block period shall be passed by the AO not below the rank of the deputy commissioner, assistant commissioner, deputy director or additional director. Sorry, assistant director. Again, I am repeating. So guys, here ITO cannot complete the assessment. So assessment will be completed either by the AC, DC, AD or DD. So in simple word, here again I am reading, order for assessment for block period shall be passed by the AO not below the rank of the DC or AC or DD or AD. It means guys, ITO cannot complete the assessment provided that no such order shall be passed without the previous approval of the additional CIT, additional DIT, joint commissioner or joint director. So in simple word, can I say that in case of the raid in the block assessment, there is a serious kind of the assessment. There is a undisclosed income and all. So in this case, guys, your assessment cannot be completed by ITO. ITO is not allowed. Here assessment will be completed by AC or DC or assistant director or a deputy director, and they also have to take the approval of the joint commissioner or joint director, additional commissioner or additional director. Then only they can complete the assessment. Done. Now next section is a 158 BB. Now what 158 BB says that how to compute the undisclosed income of the block period, because on this undisclosed income you have to pay the tax at the rate 60%. So question is that how to compute the undisclosed income. So undisclosed income of the block period means very simple, undisclosed income declared in the return furnished under section 158 BC. So guys, under section 158 BC, when you file the ITRB na, so in ITRB you have to declare the undisclosed income. So whatever undisclosed income filed by the assessee, so assessee will file in the ITRB. So this is the ITRB, guys, and in the ITRB, assessee will declare the undisclosed income. So here head-wise breakup of the total undisclosed income for the block period declared in the column. So here assessee will declare the undisclosed income. Sir, I have not declared earlier. Undisclosed income is which income which you have not declared earlier, and now you are declaring. So now you are declaring, that is called your undisclosed income. So here undisclosed income will be declared by the assessee. So assessee will declare the undisclosed income here. So undisclosed income that is declared by the assessee in the return. And guys, is assessee will declare all the undisclosed income? Is assessee is that honest? Answer is no. So whatever the assessee declare the undisclosed income in the return ITRB, or undisclosed income determined by the AO. So AO will also have some evidences. AO is also conducted the raid. So he has all the material gathered by the AO. AO is having the evidences. So AO will also compute the undisclosed income. So guys, total of this will be treated as your total undisclosed income. And on this total undisclosed income, you are required to pay the tax at the rate 60%. Done. Now next part. The following income shall not be included in the total undisclosed income of the block period. So they have given the negative list. Okay, guys, this particular income will not be considered in your undisclosed income. Like this income will not be considered in your undisclosed income. So guys, here which income will not be considered in your undisclosed income? Try to understand. First point. Total income that is assessed under section 143.3 or 144, 147, 153A, 153C or 158BC prior to the date of the initiation of search or date of the requisition. So it's very simple, guys. If your income is already assessed earlier, it is not an undisclosed income. That is obviously disclosed. Suppose before the raid, your assessment is already completed under section 143.3. 143.3 is a scrutiny assessment, 144 bad judgment assessment, 143, 147 is a income escaping assessment. Guys, this 153A and 153C is not relevant now, but earlier in such cases, that assessment is made under section 153A or 153C, and 158BC is this section. Suppose earlier also raid conducted and income is already assessed. So this is the very simple, obviously your income is already assessed earlier na, so that is not an undisclosed income na, because on this income you already paid the taxes. Now second is total income declared in the return under section 139 or in the response to notice under section 142(1) A and not covered under A. It means, guys, for an example, there is a, like, it is not mandatory na, for the last 6 years assessment was mandatorily made earlier. It is not possible. Guys, for an example, I can say that suppose out of the 6 year, for this year you just file the return, and in return you have declared the 20 lakh income. So return you have declared the 20 lakh income, so that 20 lakh is not an undisclosed income now. That 20 lakh is not covered in your undisclosed income. Undisclosed income is how much you are declaring now and how much additionally found by the AO. That is called your undisclosed income. So second point is very simple. Second point says that first is if your income is already assessed earlier, then that assessed income is not your undisclosed income. Second is income declared in the return under section 139 or in response to notice under section 142A, and guys, it is not covered, means assessment is not made but you file the return, so whatever income you have declared earlier na, that is not undisclosed income. Now third point is income computed by assessee in respect of past year that is already ended, completed year, if the return due date has not expired before the search and income is computed from books of accounts or a document maintained in the normal course. Second is current year till the date of search from the 1st April that year up to the date before the search based on the regular books of accounts, and during the search period from the date of search till the completion of last authorization based on the books and document maintained up to that date. Guys, what is the meaning of that? So guys, try to understand. All people pay attention. Sir, undisclosed income will not cover if that assessment is made earlier. That assessed income is not an undisclosed income because already you paid the taxes. Second is if you file the return, obviously assessment is not made but file the return, that is also declared income, that is not an undisclosed income. But guys, suppose for the last year, suppose raid started on the 19th of July 2025. So guys, on this date for the last year, previous year 24-25, return filing due date has not expired na, and return filing due date will be the 31st October 2025. You will declare this year income only by 31st October 2025. So question is that, sir, income of this year still return is not filed, assessment is not made. So is sir income of this year will be treated as, total income will be treated as undisclosed income? Answer is no na, guys, no na. So here, guys, for this year, whatever the income as per books of accounts, whatever the income as per the books of accounts, that will not be considered as an undisclosed income. And in the current year also, guys, raid is conducted, suppose search started. So in the current year also, like from 1st April till the date of the search, as well as the during the search period, so whatever income as per your regular books of accounts and all, that will not be considered as an undisclosed income. So again, I am reading this for the past year that is already ended. If return due date has not expired before the search and income is computed from the books of accounts document maintained in the normal course. Second is current year till the date of search from 1st April till the 1st April of that year to the day before the search based on the regular books of accounts and document, and during the search period from the date of search till the completion of last authorization based on the books and document maintained up to that date. So in simple word, I can say that whatever the income as per your books of accounts, that is not considered as an undisclosed income. Now next part. If AO feels that any part of his income is undisclosed, then he can recompute it. So in simple words, suppose for an example in this, if AO feels that if anything is undisclosed, in this particular case, AO can consider that. Now next part. Total income referred under section 115A subsection 5 or 115G or section 115P. So in simple word, I can say that, guys, suppose for an example, sometime it may happen na, can you not file the return. If you remember the section 194P, you know that 194P there was one section in the TDS TCS, pensioner, you know that pensioner, and I have mentioned that in that pensioner section, suppose if any senior citizen, and senior citizen age is I think 75 years or more, 75 years or more, and that person having only two type of the income. One is that person is having the only pension income, and second is a bank interest, and he is having only one bank account with the bank with that pension is credited, and guys, bank will deduct the TDS. So bank will deduct the TDS as slab rate, and guys, if TDS deducted under that section, then assessee is not required to file the return at all. Assessee is not required to file the return at all. There is no need to file the return at all. So guys, what happens? Suppose that senior citizen return has not been filed. Now question is wait a minute. So I was explaining that guys, suppose for an example that pensioner is having that income, and on that TDS is paid by the bank to the TDS is paid by the bank. So in that particular question is that income will be undisclosed because you have not filed the return, you have not disclosed in the return, as well as you have no assessment is not made. So question is that income will be treated as undisclosed? Answer is no, that is not treated as undisclosed income. As well as guys, there are certain this section 115A subsection 5 and 115G, there also we will discuss that in the certain cases assessee is not required to file the return. So if assessee not required to file the return and TDS is deducted, so that income will not be computed or considered as an undisclosed income. Done. So this is the completion of this part. Now what is the meaning of undisclosed income? So here undisclosed income definition is given. Okay, sir, what is the meaning of the undisclosed income? So all people focus here. What is the meaning of undisclosed income? So here undisclosed income means, so undisclosed income means income falling within the block period shall be computed in accordance with the provision of this act on the basis of evidences found as a result of search or survey in consequence of such search or requisition of books of accounts and other document and such other material or information as are either available with the AO or came to his notice by any means during the course of proceeding under section 158B to 158BI. Again, let's read it. What is the meaning of undisclosed income? So undisclosed income means income falling within the block period. So that is the income of the block period. So income falling within the block period shall be computed in accordance with the provision of this act. So that income will be computed according to the income tax law and on the basis of evidences found as a result of the search. So due to the search, they found the evidences or survey in consequence of such search. Many times what happen, you guys, you know that first search is conducted, after that there are certain surveys conducted. So that evidence is found due to the survey in consequence of such search or requisition of books of accounts and other document and such other material or information as are either available with the AO or come to his notice by any means during the course of proceeding under section 158B to 158BI. And undisclosed income includes, so they have given the define also undisclosed income, what will covered in the undisclosed income. So undisclosed income include any money, bullion, jewelry or any other virtual digital asset. Virtual digital asset is covered by this year only, like they have added the VDA, that is virtual digital asset. So undisclosed income means any money, bullion, jewelry, virtual digital asset or other valuable article or things or any expenditure or any income based on an entry in the books of accounts or other document or transaction where such money, bullion, jewelry or virtual digital asset or valuable article and things or entry in the books of accounts or other document or transaction represent wholly or partly income or property which has not been or would not have been disclosed for the purpose of this act or any expenses or exemption or deduction allowance claim under this act which is found to be incorrect in respect of the block period. So guys, here undisclosed income means they are saying that either there is a money or bullion or jewelry, virtual digital asset or any other valuable article and things or any expenditure or any income or any entry in the books of accounts, and guys, which reveals that this is belongs to any income which has not been disclosed. Income which has not been disclosed, income or property not been disclosed or would not been disclosed for the purpose of this act. Or guys, if you claim any expenditure, exemption, deduction, and that is the fake. So suppose if you claim any expenses, exemption, deduction, allowance, and that is the incorrect, so that is treated as your undisclosed income. Now next point says that note number two says that while determining undisclosed income, interest and remuneration not allowed to partner in case of the firm other than the working partner. So guys, here like any remuneration or interest is given to partner, then it is not allowed from undisclosed income. Now next part, note number 3 says that undisclosed income in case of international transaction. So guys, if transfer pricing is applicable and there is an international transaction related undisclosed income, then what will happen? So here they are saying that if during the search income is found which relates to the international transaction or specified domestic transaction 92 CA for the period from 1st April of that year up to the date of last search authorization, such income will not be treated as undisclosed income for block period. Instead, it will be assessed separately under the normal provision of the Income Tax Act. So guys, they are saying that if there is an undisclosed income related to the international transaction transfer pricing provision. So guys, undisclosed income, normally what happened? Okay, from the 1st April of previous year 25 till the date of the completion of search. Guys, whatever the undisclosed income that is covered in the block period and undisclosed income is assessed under this chapter. But there is a one exception. Okay, if there is an undisclosed income related to any international transaction transfer pricing. So either related to international transaction or a specified domestic transaction, because that is very complex issue. Transfer pricing is very complex issue here. So undisclosed income of the current previous year, that is from 1st April 2025 till the date of the completion of search, if there is any undisclosed income and that is related to your international transaction, then guys, this undisclosed income will not be covered in the block period. It is not covered under the block assessment. Here assessing officer will do separately assess that. Means here case will be transferred to TPO will do everything and all. So that will be separately done. Now next part. Any brought forward losses or unabsorbed depreciation for the previous year before block period not allowed to be set off against the undisclosed income. So guys, what happened? There may be possibility now in the block period means that 6 year. Suppose there is an income in the block period, you disclose the income as well as AO computed the undisclosed income, and that income is a 2 crore rupees. And guys, before block period there was certain losses. So question is that can assessee claim that, okay, sir, that brought forward losses, please set off against this undisclosed income. Now, sir, please set off against this undisclosed income. Is it allowed? Answer is no. Again, this undisclosed income, you cannot set off your any brought forward losses or unabsorbed depreciation. Now, next part. What will be the tax rate? So guys, here the tax rate and interest and penalty. So the tax shall be charged at the rate 60% for the block period as per section 113. So in the Income Tax Act 1961, there is a one section number 113, and 113 says that, okay guys, tax rate will be the 60%. So whatever the undisclosed income of the block period, on that block period income, the tax rate is the 60%. Now there is a doubt, okay, sir, is surcharge is applicable or not? Health and education cess is applicable or not? Right answer is, guys, under section 113 that they have not mentioned about the surcharge. Like under section 113, let me show you the section 113. So here guys, on the income tax website, so tax rate is a 60% is flat, or we have to add the surcharge and health and education cess. So let me show you the section 113. So section 113 says that, okay, what will be the tax rate? So here the total undisclosed income of the block period determined under section 158 BC shall be chargeable to tax at the rate of 60%, provided that tax chargeable under this section shall be increased by surcharge if any levied by any central act. So any levied by any central act. So guys, you know that as of now, Like on this particular section, there is no surcharge. There is no surcharge levied by Central Act as of now on this particular undisclosed income. So in simple word, I can say that here tax rate is a flat 60%. Sir, that you know that sir, we have discussed now that surcharge of the 10%, 15%, 20%, that surcharge is the different. That is on the normal income tax. Here lawmaker says that total undisclosed income of block period determined under section 158 BC shall be chargeable to tax at the rate 60%, and provided that the tax chargeable under this section shall be increased by any surcharge if any levied by the Central Act. So guys, there is no surcharge is clearly mentioned for this particular section. So as of now, there is no surcharge, no health and education cess, just you have to pay the 60% tax on the income from that is undisclosed income. Now next part, sir, on this tax, is there is any penalty also, like under section 270A? Guys, 270A penalty is a underreporting or misreporting of penalty. Underreporting, misreporting of penalty we will discuss in the penalty topic. So no interest or section 270A penalty, it means no interest under the provision of section 234 ABC is not applicable. Here guys, 234 ABC is not applicable, as well as penalty under the provision of section 270A, that under reporting misreporting penalty is not applicable, that shall not apply. So here no interest under section 234 ABC or provision or penalty under section 270A shall be levied or imposed upon the assessee in the respect of undisclosed income assessed or reassessed for the block period. Done. Now guys, next section is a 158BD. 158BD, this section says that suppose raid is conducted in case of one SSC. Suppose for an example, at the Rajnikant home, raid is conducted, search is conducted at Rajnikant home. But in that search, suppose there are certain documents, information, assets that is belongs to Mr. Dhanush. There is a one more person is a Dhanush. So Rajnikant, raid conducted at Rajnikant home, some asset, books of accounts, documents is there, and guys, that is belong or pertain or relate to Mr. Dhanush. Then what will happen? So guys, here what will happen, you know that here Rajnikant AO will hand over this detail, asset or like a document or information to the AO of the Dhanush, and guys, AO of the Dhanush will issue notice to the Dhanush to file the return of last 6 years. And guys, in case of the Dhanush also, there will be a block assessment. That is the section 158BD. So 158BD says that in the raid what happened, there is some information or document or asset that is belongs or pertains to any other person. Then guys, AO of Rajnikant will hand over everything to the AO of the Dhanush, and Dhanush AO will issue the notice to the Dhanush. Okay, Dhanush now, like it is assumed that raid is conducted on the Dhanush also, and guys, Dhanush has to submit the return of the last 6 years, and in case of the Dhanush also, there will be a block assessment. You got my point or not? Yes. So all people focus here. Point number, section 158BD, undisclosed income of any other person. So where the AO of assessee, that is a specified person, that is AO of the Rajnikant, is satisfied that any undisclosed income belongs to or pertains or relates to, any undisclosed income belongs to or pertains or relates to any other person, then any money, bullion, jewelry or any other valuable article and things, asset or expenditure or books of accounts or other document or any information contained therein, seized or requisite, shall be handed over to AO having jurisdiction over such other person, and that AO, Dhanush AO, shall proceed as per the provision of this chapter like in other person case. Now section 158BA, 158BB, 158BC shall apply. So guys, when you will file the return, so you know that we were discussing about the return, that is the ITRB. In ITRB, there is a option, there is a column, okay, like under which section you are filing the return. So here you are filing the return under section 158BC. 158BC means raid is conducted in your case. Second is 158BC in pursuant to section 158BD. Means here Rajnikant will file the return in ITRB, then Rajnikant will take the 158BC. But when Dhanush is filing the ITRB, then Dhanush will click on the 158BC. This second point, 158BC in pursuant to section 158BD. You got my point or not? Yes. Now guys, the next part. In such case, if there is only one specified person, there is only one specified person, link with the other person, then the block period of other person will be the same as that of the specified person. Now guys, this is one interesting case. Try to understand what they are saying. In such a case, if there is a one specified person link with the other person, means that raid is conducted in case of the Rajnikant. So Rajnikant is a one specified person, Rajnikant is a specified person, and like in case of Dhanush, that information is received only through the Rajnikant AO. Then guys, Rajnikant block period and Dhanush block period will be the same. Again, I am reading this point. What this point says, try to understand. In such a case, if only one specified person means Rajnikant link with the other person, that is Dhanush, then the block period for other person, that is the Dhanush, will be the same as that of the specified person. It means that block period of the Rajnikant is that 6 years. So that block period of Rajnikant and block period of Dhanush will remain same. But guys, what happened? You know that. What happened? You know that. Suppose raid conducted at the place of Rajnikant. After that, after 5-6 days, suppose raid conducted at the place of Vijay also, actor Vijay. Raid conducted at the place of the Nayantara also. Now when raid is conducted at the place of the Rajnikant, Vijay and Nayantara, and at all three places there is a connection of Dhanush. Dhanush is basically Dhanush. So Dhanush undisclosed income, like here AO of Dhanush got the information from the AO of Rajnikant also, AO of Vijay also, AO of Nayantara also. Now question is that what will be the block period for Dhanush? So guys, here block period of the Dhanush will be the block period out of this 3 SSC, whichever end later. So here what is saying that, try to understand. However, if there are multiple specified person, means raid is conducted in the multiple person, Rajnikant and that Vijay and Nayantara. In this case, the block period will match the specified person whose block period end on the later date. So whoever block period ends on the later date, suppose late, like you know that raid of the Nayantara conducted on the later date. So whatever the Nayantara block period, that will be matched with the Dhanush block period. Done. Now next part. Further, for the purpose of abatement of proceeding under section 158 BA 2 and 3, the date of search or requisition in case of other person will be taken as the date when AO of that person actually received the seized material or information related to such undisclosed income. Now what is the meaning of that? Guys, you know that we have discussed that, okay, suppose on the date of the search, suppose search started on that date, if any of the assessment is pending, that assessment will be abated. But here raid conducted in case of the Rajnikant. Now Dhanush AO received the asset or information or document and all. So guys, on the date when Dhanush AO received this document or asset, on that date whatever the assessment is pending of the Dhanush, that assessment is going to be abated. So what I am saying that, again I am reading, I am explaining this point, try to understand. Guys, when raid conducted in case of the Rajnikant, but Dhanush AO got this information. So when Dhanush AO received the information, document or asset, on that date whatever the assessment pending of the Dhanush, that is going to be abated. Done. Now next part, what is the time limit to complete the assessment, sir? What is the time limit to complete the assessment, sir? When assessment will be completed in case of the Rajnikant and in case of the Dhanush. So let's start first with the Rajnikant. Okay, when assessment will be completed for the Rajnikant. So here guys, try to understand. Rajnikant assessment will be completed. So here time limit to complete the block assessment given under section 158B. So here, sir, block period of assessment for Dhanush is the same as Rajnikant. Na? If Rajnikant only information is received from the Rajnikant AO, then Rajnikant block period and Dhanush block period is same. In case of the, like suppose Rajnikant, Vijay and Nayantara, if information is received from the 3AO, then whose block period is a later period, that block period will apply for the Dhanush. Huh? Okay, for abatement now, so abatement is normally what happens when in case of the Rajnikant assessment, search is started, then whatever the assessment pending block period is the same as block period will be same. Like in case of the Rajnikant and in case of the Dhanush, block period is the same. Guys, but sir, you know that we mentioned that on the date of search, when any assessment is pending, that is going to be abated. So searches started in case of the Rajnikant, na? So searches started in case of the Rajnikant, but here Dhanush AO received the information, document or asset. So on the date when Dhanush AO received the information or document or asset, on that day, whatever assessment pending of the last 6 years, block period will be the same as the Rajnikant. So in case of Dhanush, whatever the assessment is pending on that date, that assessment will be going to be abated. Done. Now next part, the time limit for completion of block assessment for the search assessee, that is the Rajnikant, shall be 12 months from the end of the quarter in which the last of authorization of search under section 132 or requisition under section 132A was executed or made. So in simple word, guys, here assessment of the Rajnikant will be completed within 12 months, that is 1 year from the end of the quarter, 1 year from the end of the quarter on the last date of the authorization, means search was completed. So in simple word, I can say that here assessment completion time limit is 12 months from the end of the quarter in which search was completed. So in simple word, in our example, your search is started suppose on the 15th of December 2025. So guys, and search started on 10th December 2025, completed on 15th December 2025. So this quarter is going to be end by 31st December only. 31st December 2025. So 1 year if you calculate, then 31st December 2026. So here assessment in case of the Rajnikant shall be completed till 31st December 2026. Done. Again, I am repeating. Okay, guys, in case of the Rajnikant, assessment will going to be completed within 12 months from the end of the quarter in which search was completed. So in the quarter in which raid is completed, after that quarter, within the 1 year, assessment is going to be completed, means block assessment is completed. Now next part, all people pay attention. However, an exclusion of time period, it can be maximum 6 months, shall be available in respect of period from the date of initiation of search to the date of handing over the seized material to the AO having jurisdiction over the assessee. Again, I am repeating. However, an exclusion of time period, maximum it can be 6 months, shall be available in respect of period from the date of initiation of search to the date of handing over the seized material to the AO having jurisdiction over the assessee. Now, what is the meaning of that? Guys, if you remember, I told you that it is not possible now, like in case of Reliance head office is in Mumbai. So if the raid will be conducted at the Mumbai office only, answer is no. There may be possibility raid is conducted at Mumbai office, raid is conducted at Chennai office, raid is conducted at Bangalore office also. Now there are different authorized officers. So guys, when authorized officer will hand over that material to the AO of Reliance, then Reliance AO will complete the assessment. Now, so in this particular case, whatever the time lost from the date of initiation of search till the date of handing over the material to the AO having jurisdiction over Reliance, in this particular case, from the date of initiation of the search till the date of handing over the material to the AO of Reliance, that time will be extended, means Reliance AO will get that extra time, but it can be maximum 6 months extra, not more than that. Now next part is, sir, when assessment, what is the time limit to complete the assessment of Mr. Dhanush? What is the time limit to complete the assessment of Mr. Dhanush? So here time limit to complete the assessment of Mr. Dhanush is, the time limit for completion of block assessment for any other person, that is Dhanush, shall be 12 months from the end of the quarter in which notice under section 158 BC in pursuant to notice under section 158 BD was issued to such other person. So guys, you know that when Dhanush AO got the information, document, assets and all, then Dhanush AO will ask Dhanush to file the return. So guys, here Dhanush AO will issue the notice to Dhanush to file the return for the block period under section 158 BC. So when notice is issued, so 12 months from the end of the quarter in which that notice is issued. So notice is issued from end of that quarter within the 12 month Dhanush assessment has to be completed. So in case of Dhanush also there will be a block assessment. Now guys, suppose during the block in that block assessment, if your case is transferred to the TPO, then guys AO will get the 12-month extra. Here AO will get the 12-month extra. So if your case is transferred to the TPO, then AO is going to get the 12-month extra. Now next part. In cases where the time permitted for furnishing a return under section 158 BC subsection 1 is extended by the 30 days, the period of 12 months for the completion of assessment shall be deemed to be the 13 month. Now guys, what happened? You know that like in case here what happened, we have discussed one case, your time limit to file the return can be extended by 30 days. When it is possible, like sir, last year return due date is still not expired, last year audit is there, last year audit report that due date is not audit is not completed, and assessee requested to give the 30 days extra. So when assessee will get the 30 days extra to file the return, so guys, that assessment completion time limit also, instead of the 12 month, there will be a 13 month to complete the assessment. Now last part, while computing the time limit, the time lost in the certain procedural part shall be excluded, that we will discuss same as given under section 153, like reference to VO, information from foreign country and all that we will discuss in the later part. Now last part, that is the 158 BFA. So guys, here there will be a levy of interest and penalty in the certain cases. So there will be an interest and penalty. So when interest is applicable, penalty is applicable. Try to understand. First is the interest. So here, where return of income is not furnished within the time specified in the notice under section 158 BC. So under section 158 BC, he will give you the time limit to file the return. If return is not filed within that time limit or is not furnished at all, return is not filed, that block period return is not filed, then the assessee shall be liable to pay simple interest at the rate 1.5% per month or part of the month of the tax on undisclosed income commencing on the day immediately after expiry of the time given in the notice. So here guys, 1.5% per month or part of the month is an interest on the tax on undisclosed income commencing on the day immediately after the expiry of time given in the notice and ending on the date of the completion of the assessment. So guys, you have to file the return within the time given in the notice, but suppose if you not file the return within the time given in the notice, in that particular case there will be an interest at the rate 1.5% on the tax on undisclosed income. So whatever tax on undisclosed income, on that tax there will be a 1.5% is interest, and that interest will run exactly after the time allowed in the notice, exactly after the time allowed in the notice and ending on the date of the completion of the assessment. Done. Now last part is a penalty. Guys, tax is 60%, on that penalty is 50%. So here penalty on the undisclosed income shall be the 50% of the tax payable on the undisclosed income. So whatever the tax payable, on that there is a 50% penalty. So 60% is tax rate, on that 50% penalty is a 30%. So total comes to the 90%. Done. However, penalty under section 158 BFA subsection 2. So this is the penalty 158 BFA 2. We are discussing 158 BFA 2. So this penalty can be waived when or under section 271A, 271D, 271DA, 271E can be avoided if the following conditions are satisfied. So guys, this penalty of the 50% as well as this penalty, now this penalty is 271DA, 271D, 271A, 271E. That penalty is like, you know, that cash loan penalty and all. There is a section 269 SS, 269 ST. If you did the tax audit, then you know that in the 269 SS and 269 T, you have to do the reporting. Okay, suppose if any loan is taken 20,000 rupees or more in the cash, then there will be a violation and there can be 100% penalty. So that penalty as well as this penalty can be avoided. When it can be avoided, first is there are certain conditions. First condition, assessee has furnished a return under section 158 BC. So assessee filed the return. Second condition, tax payable on the basis of such return has been paid, or if the asset seized consists of the money that assessee offered the money, so seized to be adjusted against the tax payable. So first condition is assessee filed the return. Second condition is that assessee paid the taxes on the undisclosed income, whatever he declared in the return, or he has just mentioned to the income tax department, okay, you have seized my money, just adjust my money against the tax payable. And evidence of the tax paid is furnished along with the return, and appeal is not filed against the assessment of that part of the income which is shown in the ROI. So guys, here I can say that in simple word, normally in case of undisclosed income, if raid is conducted for the block period, if there is an undisclosed income computed, then on that 60% is tax and on that 50% is penalty. But this 50% penalty can be avoided when first condition, assessee furnish the return, assessee disclose the undisclosed income and he paid the taxes on that undisclosed income. He paid the taxes on undisclosed income. He has furnished the evidence of the tax paid along with the return. And guys, he is saying that I am not going for appeal. So assessee is not going for appeal. Appeal is not filed against the assessment of that part of the income which is shown in the ROI. However, the above concession shall not apply where the undisclosed income in the return, and in such cases again I am repeating, however, the above concession shall not apply where the undisclosed income in the return, and in such cases the determined by the AO in excess of the income shown, penalty shall be imposed on that portion of undisclosed income determined which is in excess of the amount of the income shown in the return. So this is very simple part, okay guys. Suppose for an example, in the undisclosed income you have declared the 2 crore rupees, you paid the taxes on 2 crore, penalty is not applicable. But guys, in the AO what happened, AO raise your income, undisclosed income to the 5 crore. So whatever this 3 crore difference, now on that 3 crore is penalty will apply. Answer is yes. Obviously on the 3 crore there will be a tax of 60% and 50% penalty. So this is the completion of your block assessment. So this is the completion of your block assessment. Now guys, do one thing, just read or just check one question given on the page number 327. So on the page number 327 there is a question number 37. Read it very carefully, and I have given the total 9 question on this particular concept. Just read it, and you have 10 minutes break. So in that 10 minutes you have to read this section, question number 37 and solution of this. Yes people, done with your break? Welcome back after break. So guys, now we are going to start with the safe harbor rules. Now what are the safe harbor rules? So in the simple word I can say that safe harbor rules means there are certain rules, and in those rules it is mentioned that if you declare this much profit, like operating profit divided by operating expenses is this much, then department will accept it. Department will not dispute it. Department will not raise the question. That is called safe harbor. And guys, this is the most important point for your examination. In your examination, you will get one question from here, because this is applicable for your examination only. Earlier it was not applicable. Earlier it was there in the rules, but guys, you know that every time they notified the rules very late, so it was not applicable for examination purpose. But now this time it is applicable from the Jan 2026 exam. So Jan 2026 also it is applicable, and guys, for the May 2026, September 2026, Jan 2027 it is applicable. So what are the safe harbors? All people pay attention. Safe harbor rules. So guys, here safe harbor rules, there is a section 92 CB. This section says that safe harbor means circumstances in which the income tax authority shall accept the transfer pricing declared by assessee. So whatever your transfer pricing, they will accept it. So there are certain industry, it is not applicable for every industry. This is applicable for certain industry. So first it is applicable for provision for the software development service. So if you are providing the software development service, or provision for the information technology enabled service, that is IT enabled service. So guys, one is, this is applicable, first industry is the software development service, and second is the IT enabled service. So if you are in the software development service or IT enabled service, then guys, do one thing, your operating profit margin declared by the assessee from the eligible international transaction in relation to the operating expenses should be, if your international transaction value is within the limit of 100 crore, then just declare the 17% profit. And guys, if that international transaction value is more than 100 crore, up to 300 crore, then just declare the 18% of the margin. And if your international transaction is more than 300 crore, then obviously this safe harbor rule is not applicable. This safe harbor rule is not applicable. So first safe harbor rules for one of the industry, that industry is a software development service or IT enabled service. In the yesterday lecture also I have mentioned that that in the Bangalore or in the Pune and all, there are various companies, they are developing software, they are providing IT enabled service for their non-resident associate enterprise. So for those companies, guys, for those entities, they are saying that if your international transaction is up to 100 crore na, then just declare your profit of the 17%. If your international transaction is more than 100 crore up to 300 crore, then declare your profit as 18%. This is called safe harbor. If you declare this much profit or higher than this, then guys, it is as per the safe harbor. Department will not question you. They are not going to object it. But what is the meaning of software development service? So guys, here software development service including the building business application, information system with the existing tools. So guys, with the existing whatever the software development tools, with the existing tools, if you are building the business application or information system or maintaining system or converting languages or adding features or debugging or adapting existing software or preparing user document, etc., etc. But it does not include any R&D activity, even contract R&D. So research and development is not included here. So guys, here in India, that enterprise is engaged in the software development service. So software development service means either they are building the application or information system with the existing tool, maintaining system or converting languages or adding features or debugging or adapting existing software or preparing user document, but it does not include the any research and development services is not included here. Research and development service is not included here, including the contract R&D is not included here. Now what is the meaning of the IT enabled service? So guys, IT enabled service means normally BPO service. So in case of the IT enabled service, are the BPO services delivered mainly using the IT. So these services are provided mainly using the information technology like back office support service or call or contract center service, data processing or mining service, insurance claim processing service, or legal database or medical transcription. No medical advice. They are doing only medical transcription or translation, or payroll service, remote maintenance service, revenue accounting service, support center, website service, data search, integration analysis, and remote education, not content development, and any clinical database management service, not clinical trials. They are not doing the trials. They are only clinical database management service, but it does not include the research and development service, even the contract R&D. So research and development is not included. So guys, here how we can understand that? Okay, guys, safe harbor rules. First industry is the one is the if assessee engaged in either software development or IT enabled service. Software development is related to the software service, and guys, here IT enabled is basically BPO service. BPO service is basically covered in the IT enabled. BPO services provided through the IT tools. So that is called your BPO services, that is IT enabled service. So guys, in this two industry, if assessee is engaged in providing this two service now, then how much profit you have to declare? If your international transaction is within the limit of the 100 crore, then your operating profit divided by operating expenses should be 17%. But if your international transaction is more than 100 crore up to 300 crore, then guys 18%. Here 18% is a operating profit divided by operating expenses. Because obviously when you are providing this service to your associate enterprise, so selling price is a tented, selling price is a tented, your cost is not a tented. So this operating profit should be decided on the operating expenses. So operating profit divided by operating expenses is 17% or 18%. If international transaction is within the limit of 100 crore, then 17%. If it is more than 100 crore up to 300 crore, then 18%. And guys, if this international transaction is more than 300 crore, then guys, this safe harbor rule is not applicable. Now, second industry. Second is if you are providing the KPO service. You are providing the KPO service. KPO service is basically knowledge process outsourcing service. If you are working with the Big Four or Morgan Stanley or JP Morgan and all, then you know that they are having the KPO division. That is the knowledge process outsourcing service. So guys, first is how you can remember this first part. First part is 17-18%. You can remember. Okay, guys, you know that this is happening in 17-18 years. Like Hindi we call it ऐसा पहली बार हुआ है 17-18 सालों में. So from 17-18 years there is no safe harbor rules. First time it is happening. So you can understand that in case software development service, IT enabled service, it is first time happening in the 17-18 years. So 17% international transaction is up to 100 crore, then 17%. If it is more than 100 crore up to 300 crore, then 18%. Now next is related to the KPO service. Now what is the meaning of the KPO service? So guys, here this KPO service, provision for the knowledge process outsourcing service, applies only if the total transaction value is within the limit of the 300 crore. So here total transaction value should be within the limit of the 300 crore. Now KPO service means KPO are higher end BPO services done mainly using the IT that need advanced analytical or technical skill. So basically KPO are the higher end BPO service done mainly using the IT that need the advanced analytical or technical skill. Example is geographic information system or HR services or engineering and designing or animation and content management and business and financial analytics and market research, but it does not include the research and development service. Even the contract R&D is not included. So research and development service is not included here. Now guys, if your enterprise is providing the KPO service, knowledge process outsourcing. So knowledge process outsourcing service, then how much profit you should declare? First is in your cost, what is your employee cost? Because in the KPO service, obviously this is basically employee based service. So in India, you have the KPO setup. So in KPO service, guys, you are providing to your associate enterprise, what is your percentage of cost towards the employee? If your employee cost is less than 40%, if your employee cost is less than 40%, then guys, your operating margin should be the 18%. 18% is operating margin. If your employee cost in the operating expenses is 40% or more, but less than 60%, then you should declare the profit of at least 21%. If your employee cost in the operating expenses is 60% or more, then you should declare the 24% of the profit. That is operating profit divided by operating expenses. You will say, sir, what we are studying karke, theek hai? But I can't do much here. I cannot dance. I just say that, yeah, that is the reasonable profits. That's why they have, I cannot give the logic of that, why 18%? Because there is a reasonable thing. So here they are saying, suppose for an example, if you are providing the KPO services, then how much profit should be declared? So first you have to check that what is your employee cost in your operating expenses. If your employee cost in the operating expenses is less than 40%, then just declare the 18% of the profit. If employee cost is a 40% or more, but less than 60%, then just declare the 21% profit. And guys, if your employee cost is a 60% or more, then just declare the 24% of the profit. Just declare the 24% of the profit. Now, how you can remember? Don't take it otherwise, just this is an example. Okay, guys, you know that when you were the 18-year-old, then your knowledge was very less. That was less than 40%. When you were the 18%, I am talking about which knowledge, I can't say, but just this is an example, just to understand. Guys, when you were the 18 years old, then you know that you're 18 years old, then your knowledge was very less about your partner and all. You can say that. So knowledge is very less. So guys, that less than 40%, your knowledge was less than 40%. But when you are 21%, then you have the good knowledge. Means passing percentage is there. So if it is 40% or more, but less than 60%, then 21%. But guys, if you are at 24 years old, then you are the expert. You are the expert. You are claim the exemption. You are the pro in the knowledge. So your knowledge is a 60% or more. So 60% or more, then it is the 24%. So you can remember it by this way. Okay, guys, when you were the 18-year-old, then your knowledge was very few knowledge, not very little knowledge. So less than 40% like knowledge. But guys, when you were the 21%, then knowledge is basically 40% or more, but less than the 60%. But if you are the like 24 years old, then your knowledge is a pro knowledge. Your knowledge is a pro knowledge. It means, guys, here you have to, your knowledge is a 60% or more. So in simple word, I can like this is just to explain you or just to remember this percentage. When you were the 18 years old, your knowledge is less than 40%. 21-year-old, then your knowledge is 40% to 60%. And guys, 24-year, then you are the pro. It means your knowledge is a 60% or more. So guys, in case of the KPO industry, sir, how much profit should be declared? So how much profit should be declared? So first you have to check that what is your employee cost. If your employee cost in your operating expenses is less than 40%, then 18% profit. If it is a 40% or more but less than 60%, then 21% profit. And guys, 60% or more, then guys 24% profit you have to declare. So as of now, we have discussed about the two industry. One is the guys software development and IT enabled service. And second is the KPO service, knowledge process outsourcing. Now, in case of the software development and IT enabled service, if your international transaction is within the limit of the 100 crore, then declare the 17% profit. If it is more than 100 crore up to 300 crore, then 18% profit. And guys, in case of the KPO service, it should be within the limit of the 300 crore. If your employee cost in the operating expenses is less than 40%, then 18%, 40% to less than 60%, then guys 21%. And guys, if it is more 60% or more, then 24% profit should be declared. Done. After that, guys, this point as of now, just skip this point for some time. We'll discuss later. Now, next part is related to the, suppose you are providing the corporate guarantee to your associate enterprise, then what will happen? Corporate guarantee to your associate enterprise. Then obviously you should charge the guarantee commission, guarantee fees. Providing corporate guarantee means you are providing corporate guarantee to your associate enterprise, means associate enterprise is taking any loan and you are providing the guarantee. So in this particular case, how much fees should be charged? So here, commission or fees declared minimum 1% per annum on the amount of the guaranteed. So whatever amount you have guaranteed, now at least 1% should be your fees, or you can say that the commission. Minimum 1% is required. That is called safe harbor. Now here, an explicit guarantee given by company for the borrowing, it may be short term or long term, of its non-resident wholly owned subsidy. It is only for wholly owned subsidy, and it excluding letter of comfort, implicit guarantee or performance guarantee or any similar like assurance, that is not covered here. So any letter of comfort is given or implicit guarantee or performance guarantee is given, that is not covered here. Only if there is a corporate guarantee is given, it is like a bank guarantee. For an example, suppose in India there is a one company BB Limited. Now in the Dubai also we have one company, that is BB Dubai Limited. And guys, BB Limited India is a holding company. This is the holding company. And guys, BB Dubai is a subsidiary company. Now suppose BB Dubai Limited took the loan from the bank. And suppose they took the loan from the Dubai bank. And they took the suppose 10 crore rupees loan. And we guaranteed it. Total 10 crore guarantee is given by the BB Limited. Then we should charge at least 1% of the guaranteed amount. So here loan amount is a 10 crore. So guys, loan amount is 10 crore multiplied by 1%. It comes to the 10 lakh rupees. So every year our commission should be the 10 lakh rupees. 10 crore multiplied by 1%. So that comes to the 10 lakh rupees. 10 lakh should be charged as a commission or guarantee fees from the BB Dubai Limited. Then it is as per the safe harbor. So here this point says that try to understand, okay, providing the corporate guarantee, then commission or fee declared minimum is 1% per annum on the amount guaranteed. And here guys, guarantee is given by company for borrowing short term or long term to its non-resident wholly owned subsidy. So this safe harbor is applicable only when wholly owned subsidiary has taken the loan and you are providing the guarantee. Done. Now next part is related to the, suppose if you are doing the R&D service in India, research and development service. So guys, next part is a provision for the contract R&D service wholly or partly relating to the software development. So guys, if there is a contract R&D related to the software development, so you are not doing the software development, you are doing the just research and development related to the software development, then guys, you should declare the profit at least 24% if the transaction value is up to 300 crore. 24% means operating profit divided by operating expenses. It should be the 24%. Then it is as per the safe harbor. So in the India, there are various companies, they are doing the software development related research only, R&D service. So in case of R&D service, when they are doing the R&D for their non-resident associate enterprise, so from non-associate enterprise, they should charge at least 24% margin on their operating expenses. So if they are charging 24%, then guys, it is treated as per your safe harbor. Done. So here, what is the meaning of contract R&D software? So here, contract R&D software means high-end software research and development. Example is, they are given the example, new algorithm or work on the operating system or languages or data communication software or developing tools and internet tech or methods of designing, deploying, maintaining software or advance in the capturing, storing, retrieving or manipulating, displaying information, experimental work to fill tech knowledge gap, and specialized tools, image processing, geodata, OCR, AI also include upgrading existing product when source code is provided, but not when source is shared, only for the routine debugging. Now guys, this is all a technical word you will not able to understand in the examination. If examiner give the question, he will say that SSC engaged in the research and development related to the software development. There is no need to remember everything, what is written here, what is the meaning of the software development R&D. So guys, in case of the software development R&D, here you have to declare the profit of the 24%. Now next part, and this is the last part related to research and development. Suppose in India, if there is a provision for the contract R&D service wholly or partly relating to the generic pharmaceutical drugs. Now generic pharmaceutical drugs, guys, one is the branded medicine, one is the generic. So in India, suppose you are doing the research and development service wholly or partly relating to the generic pharmaceutical drugs, and guys, your international transaction is within the limit of 300 crore, then declare the profit of the 24%. So here also it is 24% and here also 24%. So contract R&D in relation to the software development, then 24%, and research and development related to the generic pharmaceutical drugs, then also 24% profit you have to declare. Now next part is and this is the last part, try to understand. Guys, manufacture and export of core auto component. In India, you know that there are various companies, they are manufacturing the auto component like steering or gearbox and all. So they are manufacturing and after that they are exporting. So if you are into the core auto component, if you are manufacture and export the core auto component, now what is the meaning of core auto component? I will explain you. Then you have to declare the profit of at least 12% on the operating expenses. Means your operating profit divided by operating expenses should be the 12%. So at least 12% in case of the core auto component manufacture and export. But guys, suppose if you manufacture and export the non-core auto component, then minimum profit should be the 8.5%. Operating profit divided by operating expenses should be the 8.5%. So in simple word, how you can remember? When you were 8.5-year-old, then you just know little bit about the auto component. So that was like non-core auto component. But when you were the 12-year-old, that time you got the expertise in the core auto component, like you know every car and all. So core auto component you got the knowledge when you were the 12-year-old, but 8.5-year-old you were know little about. So in case of the non-core auto component, if you manufacture and export, then 8.5% profit you should declare, and in case of the core auto component you should declare the at least 12% profit. Now what is the meaning of the core auto component? So here guys, core auto component means e-vehicle system and parts like key vehicle system and part, like engine, powertrains, like piston, valves, cooling system, etc., etc. That is called core auto component. So engine and powertrains is your core auto component. Transmission and steering like gears, axles, clutches, that is called your core auto component. Suspension and braking system, so whatever the brakes, leanings, stock observers and leaf springs, that is core auto component. And guys, lithium iron batteries for the electric and hybrid vehicles, so lithium iron battery is also called your core auto component. So if you are into the manufacturing and export the core auto component, now just declare the income of the 12%, means profit should be the 12%. But you are not into the core auto component, then guys you have to declare the 8.5% is profit. Guys, I can't dance in this particular concept. Obviously whatever is there, we have to ultimately do the rectify only. You have to by heart this, you have to like try to remember the percentage. Okay, again I am repeating, all people try to understand what we have discussed till now in the safe harbor rules. So guys, in the safe harbor rules, all people pay attention. Safe harbor rules, safe harbor rules, safe harbor rules, safe harbor rules. So guys, in the safe harbor rules, if you remember safe harbor rules, we have discussed the various industry. One is the software development and IT enabled service. If your international transaction is within the limit of 100 crore, declare profit 17%. More than 100 crore, up to 300 crore, then 18%. In case of the knowledge KPO service, you have to see that how much is your employee cost in the operating expenses. If employee cost is less than 40%, then declare the 18% profit. 40% or more but less than 60%, then 21%. 60% or more, then 24%. Now last part is if you are providing the guarantee, corporate guarantee to your 100% wholly owned subsidiary company, corporate guarantee, then commission should be minimum 1% of the guaranteed amount. After that, suppose you are doing the R&D service, research and development related to software development or research and development related to the generic pharmaceutical drugs, then you should declare at least 24% profit. And guys, last is in case of the auto component. Now in case of the auto component, if it is a core auto component, manufacture and export core auto component, then declare the 12% profit. And if it is not a core auto component, in this particular case, just declare the 8.5% is your profit over the operating expenses. Then this is as per the safe harbor. This is as per the safe harbor. You got my point or not? Yes, sir. We understood your point. Done, guys? Okay. Now one more point. And guys, this point I'm trying to explain you, but you will say this, sir, what is happening here? But whatever is there, you have to understand. Okay. Now next part and last part. This part says that advancing of the intragroup loan where the amount of loan is denominated in the INR. So guys, here what happened? You have given the loan to your associate enterprise. Then what should be the minimum interest you should charge from your associate enterprise? I can take one example. Suppose in India, there is one company name is a BB Limited. And guys, in the USA, suppose there is one company name is a Sunny Limited. Both are the associate enterprise. Both are associate enterprise. Now guys, we have given the loan to our associate enterprise. So BB Limited has given loan to the Sunny Limited. And suppose that loan is 100 crore rupees. So 100 crore rupees loan is given to our associate enterprise. It means here associate enterprise will give us the interest. So in Indian company hand, there will be a interest income. So here question is that what should be the interest rate? At least what should be the minimum interest rate we should charge from your associate enterprise? So guys, here they have given the table. This table says that interest rate declared is minimum 1 year marginal cost of fund lending rate of the SBI as on the 1st April of the previous year. So suppose for your examination, your 1st April of previous year is a 1st April 2025. So on this date, whatever the SBI 1 year of cost lending rate. So 1 year of marginal cost of fund lending rate of the SBI as on the 1st April of previous year, suppose that is the 9%. Example, that is the 9%. Now you have to check that what is the your associate enterprise credit rating. Your associate enterprise is a Sunny Limited. If Sunny Limited credit rating is the AAA to the A, if your associate enterprise, that Sunny Limited credit rating is AAA to the A, means A category, then just add the 1.75%, means 175 basic points should be added to the SBI rate. So SBI rate is a 9%. Then you have to add, suppose your associate enterprise credit rating is the A category, that is AAA to A. In this particular case, just add the 1.75%. Now suppose your associate enterprise credit rating is the BBB minus or BBB plus, then just add the 3.25%. If your associate enterprise credit rating is basically BB to the B, then add the 4.75%. Your associate enterprise credit rating is a C to D, then just add the 6.25%. And guys, your associate enterprise, there is no credit rating. So no credit rating, and total INR loan is given to all the associate enterprise up to 100 crore on the 31st March. If there is no credit rating and loan is within the limit of the 100 crore, then guys just add the 4.25% in your SBI rate. Sir, how we will remember this? How we will? I don't think that examiner will ask question on this part. I feel examiner can ask as of now, like you know that earlier also the safe harbor rule was applicable in 2018, 19, 17 and all. That time examiner used to ask the question either on the software development service, IT enabled service, sometime he may ask on the KPO service, or he always ask on the this part, that is core auto component and non-core auto component. And sometime maybe the contract R&D. Otherwise, guys, related to this, obviously it is not possible to remember these points. Now, how you will able to remember what is the associate enterprise rating and all. So all people again, here you can remember the difference is 175 minus 3.25. So I think difference is 1.5 now. Here difference is 1.5. Here also difference is 1.5. Here also difference is 1.5. And here there is a downward difference is of 2. 1.5 is the difference between all. Okay. So guys, suppose loan is given to your associate enterprise and that loan is denominated in the Indian rupees. If loan is denominated in the Indian rupees, then how much should be the interest income should be recorded as per safe harbor? So guys, first take the previous year 1st April SBI 1 year marginal cost of lending rate. So whatever the SBI 1 year cost of lending, marginal cost of lending rate, plus now you have to check that what is the associate enterprise, the credit rating. If that associate enterprise is class, they are from the A category. Suppose they are from the A category, AAA to the A. In this particular, just add the 1.75%. If they are from the triple B category, triple B means BBB minus or BBB plus, then just add the 3.25%. If they are from the BB to B category, then just add the 4.75%. They are from C or D, then just add the 6.25%. And guys, there is no credit rating. And all associate enterprise loan is given is within the limit of the 100 crore, then just add the 4.25% in your SBI rate. You got my point or not? Yes, this is applicable when loan is denominated in the INR, that is Indian currency loan. Means loan is of 100 crore, then you have to follow this table. But guys, if loan is denominated in the foreign currency, then there is the more difficulty. Okay. Now what is that? Try to understand. Advancing of the intra-group loan where the amount of loan is denominated in the foreign currency. Now here, interest rate declared is minimum reference rate of the relevant currency as on the 30th September of previous year. So first you have to consider the reference rate of the relevant currency as on the 30th September of the previous year. Now guys, this reference rate of the relevant currency as on 30th September of the previous year. Now what is the meaning of the relevant reference rate? What is the meaning of the reference rate? So guys, there are lots of reference rate. I will show you. I have not considered here. I have not included here all the reference rate. But whatever the reference rate, I feel if examiner asks this difficult question, then he will give the reference rate at least. Okay, this is the reference rate of this particular currency for dollar. This is the reference rate for the euro. This is the reference rate for this particular currency. This is the reference rate. Now guys, in that reference rate as on the 30th September of previous year, you have to add. But how much you have to add? First, you have to check that the total loan to associate enterprise is within the limit of the 250 crore rupees or loan is more than 250 crore. If loan is within the limit of the 250 crore, now check if that associate enterprise is covered in the A category, triple A to A, then just add the, if loan is within the limit of 250 crore, then just add the 1.5%. If that is covered in the triple B band, then just add the 3%. So here difference is a 1.5. If that is covered in the BB plus 2B, then guys 4%. And guys, if that is covered in the C or D or there is no rating, then just add the 4%. But suppose if loan is more than 250 crore and they covered in the triple A category, then add the 1.5%. If it is the triple B band, then 3%. If it is a BB plus 2B band, then 4.5. And guys, C or D or there is no rating, then here it is a 6%. So guys, again I am repeating here. If you remember now, so here more than 250 crore, here exact difference of the 1.5 everywhere. But here is the 1.5 to 3, and after 3 there is a 4 and 4 only. Here in the both the cases there is a 4. Okay, again I am repeating. So guys, suppose loan is given to the associate enterprise and that loan is denominated in the foreign currency, like dollar loan or euro loan is given, that is foreign currency. Then how much should be the interest rate? So guys, for that interest rate they are saying that first take the foreign currency reference rate as on 30th September of previous year, and after that just add some basic point. Now what the basic point? First we will discuss about the if loan is more than 250 crore. If loan is more than 250 crore and that associate enterprise is covered in the A category, like A category, then just add the 1.5. They are covered in the triple B band, then just add the 3%. They are into the BB to B band, then just add the 4.5. And guys, they are covered in the CD category or no rating, then just add the 6%. And guys, if loan is within the limit of the 250 crore na, then guys A category 1.5, triple B band 3%, and guys after that if BB or minus B or guys C or D or there is no rating, then 4% you have to add if loan is within the limit of the 250 crore rupees. Now what is the meaning of intra-group loan? So intra-group loan means a term loan given to the non-resident associate enterprise by non-financing group company. That is not a bank or financial company or normal lender. It is basically like not given by bank. It is given to your associate enterprise. It is not applicable for bank. And it must have the fixed repayment term. Like open-ended credit line or facility don't qualify. Here it is a fixed term of the repayment is given. Okay, like within the 3 years you will repay it or within the 4 years you will repay it. So guys, there must have the fixed repayment terms is there. In this particular case, it will be treated as the intra-group loan. Now your question is, what is the meaning of the reference rate here? Guys, this reference rate I have not covered here, but let me show you. If you wish, then I can show you from our ICI module. ICI module in the study material, new syllabus, CA final, English medium, applicable for May 2026 onward. May 2026 onward, direct tax and international taxation in the module number 4. So in the module number 4, transfer pricing topic. Here, let me show you the reference rate. Yes, guys. So here, from here, it is starting your safe harbor rule 92 CB, 24, 21, 18%. Here it is Indian rupees, then there is no issue. In the foreign currency, then these are the rate 1.5, 3 and 4, 1.5, 3, 4.5 and 6. Okay. Now here, foreign reference rate is given. Now guys, if it is possible for you to remember, you can remember, but I feel it will not be possible to remember. So what they are saying, what is the meaning of the reference rate of the US dollar? US dollar reference rate is the 6-month term secured overnight financing rate, SOFR, currently administered by the Chicago Mercantile Exchange, as increased by 0.45%. Second is for euro. 6-month euro interbank offered rate, currently administered by the European Money Market Institute. For the UK pound sterling, 6-month term sterling overnight index average सोनिया जिसको बोलते हैं, currently administered by the ICE benchmark, has increased by 0.3%. For Japanese year, for Australian, for Singapore. So I feel it is not possible to remember this. That's why I have not included this. But if you have like guts or to remember this, then you can remember. It is your choice, but I have not included there. If examiner asks, because you have to remember this rate also, and in this rate is based on the associate enterprise credit rating. So I feel that examiner will not ask in that difficult question. So that's why I have not covered that reference rate. Okay, again I am repeating this two part. Guys, if intra-group loan is given, intra-group loan means loan is given to your associate enterprise, then how much should be your interest income? First is, if loan is denominated in the INR, INR means Indian rupees. In this particular case, you have to take the first April of the SBI 1 year of marginal cost of lending rate and plus add some basis point. Now, how much basis point? Suppose your associate enterprise in the A category rating, then just add the 1.75%. They are into the triple B band, then just add the 3.25. They are into the BB or B band, then just add the 4.75%. They are into the C and D band, then just add the 6.25%. And there is no credit rating and loan amount is within the limit of the 100 crore, then just add the 4.25% in the SBI rate. But guys, suppose if loan is denominated in the foreign currency, like dollar loan is given or euro loan is given and all, then they will give you the reference rate as of the 30th September. And in that reference rate, just add the basis point. Now, how basis point you will add? First is, if loan to associate enterprise is within the limit of 250 or more than 250 crores. First discuss more than 250 crore. If it is more than 250 crore and associate enterprise in the A category, then just add the 1.5%. They are into the triple B band, then just add the 3%. They are into the BB to B band, then add the 4.5%. And guys, they are into the C or D category or there is no credit rating, then just add the 6%. But suppose if loan is within the limit of the 250 crore, then guys, here 1.5% is same, here 3% is same, and here instead of the 4.5 and 6, just take the 4%. This is the most difficult safe harbor rule. You can say that, lots to remember. Now, last safe harbor is very simple. And last safe harbor says that receipt of the low value adding intra-group service. Receipt of the low value adding intra-group service. So here lawmaker says that safe harbor apply only if the total value including markup is up to the 10 crore rupees and markup is within the 5%. Now, what is the meaning of the low value added intra-group service? So guys, low value adding intra-group service means support type of service. Suppose if you receive support type service done within the group that are not core to the business, don't use or create unique intangible, don't involve significant risk, they are not a shareholder or duplicate service, or typically lack reliable external comparables, excluding research and development, manufacturing and production, software development, IT enabled, KPO, BPO, purchasing of raw materials, sales, marketing, distribution, financial transaction, extraction, exploration and processing of natural resources, and insurance, reinsurance, they have excluded. So basically, what is the low value intragroup service? So guys, for an example, suppose from one of your associate enterprise, you are getting some support service. That is basic service, support service. That is not a research service. That is not a services having significant risk. No, only low value added service. If you receive support service from your associate enterprise, and guys, the total value of that intra-group support service is within the limit of 10 crore and markup should be the 5%, means you should pay only up to 5% of the profit. So here, this is not more important for your examination purpose. An accountant must clarify that the cost pooling method is proper, shareholder and duplicate cost are excluded, and the allocation key used are reasonable. So guys, you can skip this particular point. Low value added intragroup service means from your associate enterprise, you are getting some service that is very low value added service. So you will pay them. So you should pay them, but that value is within the 10 crore and markup should be within the limit of 5%. That markup should be, means profit should be the minimum, profit should be the maximum 5%. You can say that it should be up to 5%, 5% or less करके, ठीक है? Done. So this is the completion of your safe harbor rules. Again, I am repeating all the safe harbor rules. Try to understand. This is my last try to remember the safe harbor. Then we will do some question. Safe harbor rules, section 92 CB. Safe harbor rules means whatever profit you declare, department will accept it. First is in case of software development service, IT enabled service. If your international transaction is within the limit of 100 crore, declare 17%. More than 100 crore, up to 300 crore, declare the 18%. After that, KPO service depends on your employee cost. Less than 40%, then 18%, 40% or more. But less than 60%, then 21%, and more than 60% or more, then 24% profit. Now, in case of the intra-group loan, means you have given the loan to your associate enterprise, and guys, you are getting the interest. Then how much should be the interest? So, in case of the like Indian currency loan, first take the 1st April SBI 1 year of marginal cost of lending rate, and after that add this basis point. And in case of the foreign currency loan, just take the reference rate, and after that add this basis point. After that, suppose for an example, if you are giving the corporate guarantee to your 100% subsidiary company, then charge at least 1%. Charge at least 1% of the guaranteed amount as a commission or fees. And guys, next is in case of the R&D service, contract R&D service related to the software development or related to the generic pharmaceutical drug, then declare the 24% profit. And in case of the core auto component manufacture and export, then declare the 12% profit. In case of the non-core auto component, declare the 8.5% profit. And in case of the intra-group low value added service you are taking, then profit markup should be within the limit of the 5%. And guys, here, like that value of intra-group service should be within the limit of the 10 crore. Done. Okay guys, now we are going to start with one discussion. Okay, sir, how to opt this safe harbor? Now there may be possibility in some of your books this part is not there. There may be possibility that in some of your books this part is not there. Like this procedural part from here till here, it is there or not? I don't know. I think in the Yashwant book or some people book there may be possibility that this part is not there. Furnishing of the form. Furnishing of the form 3CEFA. Procedural part is not there in your book. Okay, in the Yashwant, I know. So book also. Okay. So guys, what you have to do, you have to either copy it for one page. Only you have to take the copy, or you can write also at your home. Now where we will get this PDF. So don't worry, you have to just log into the bbvirtuals.com. In the bbvirtuals.com, free resources are given, and in the free resources, just check the direct text, and in the direct text guys, here the new case law is amendment for the Jan 2026 one file is given, that is new case law and amendment for the Jan 2026, and here in the safe harbor, here it is given that procedural part. So you can take the 2 pages printout here, you can take the 2 pages printout till this part, that 4 point and this part. Procedural part, just take the printout from our website, that PDF is available. You can take the printout from this part, or you can write also as per your wish. Okay. Now guys, how to opt this safe harbor? What is the procedure? So all people focus here. Procedure for follow the safe harbor. So first is, guys, furnishing of the form 3CEFA. There is a one form that you have to furnish. Now assessee must file form number 3CEFA with the assessing officer, but till what time? On or before the due date under section 139(1). So on or before the due date under section 139(1), and when transfer pricing is applicable, then obviously your due date is the 30th November of assessment year. So up to the 30th November of assessment, you have to file this form with the assessing officer. Now guys, if you are opting safe harbor for the 1 year, then for the 1 year, then due date for that assessment year. But guys, suppose you are opting safe harbor for more than 1 year. There may be possibility that if you want the safe harbor for 2-3 years, you can do it. Answer is yes. If you are following for more than 1 year, then due date of the first assessment year means at least before the due date of first assessment year, you have to file the form that is 3CEFA. Now next part. Condition: return of the income for that assessment year must also be filed before the filing of the 3CEFA. Means you have to file the return before filing the 3CEFA form. Now validity option continue for the period in the form or 3 year, whichever is less. Suppose you are opting this option for 1 year, then it is applicable for 1 year. If you opted this option for 2 year, then it is applicable for 2 year. But suppose you are opting this option for 3 year, then it is applicable for 3 year. But if you are opting for 5 year, then it is applicable for 3 year, because maximum can be for the 3 year. 3CEFA, let me show you the form 3CEFA. So form 3CEFA of the income tax. So guys, here form 3CFA. So this form is given, that is the application for opting for the safe harbor. To the assessing officer, I propose to off the safe harbor rules under section 92 CB. Full name of the assessee, permanent account number, address of the assessee, nature of the business and activity of the assessee, status, whether option is exercised for 1 assessment year or multiple assessment year, you have to mention here. After that, date of furnishing of return means before you have to file the return, before filing this form. And guys, eligible international transaction, eligible international transaction means your associate enterprise detail. What is the value of that international transaction? Everything you have to mention here. Everything you have to mention here, and this is called one form. That form you have to file to opt for the safe harbor rules. So guys, here this point says that safe harbor rule, you have to file one form, that is 3CEFA. Assessee must file this form with the assessing officer before the due date of return filing, and for 1 year you are filing, then for that assessment year before due date of return filing you are filing, but you are filing for the multiple year, then also that first year before the due date of return filing you have to file this form. Return of income of that assessment year must be filed before filing this form. And guys, this option is available for maximum 3 years, either whatever time written in this form or 3 year, whichever is less. Now next part, what AO will do: verification by the AO. So AO shall verify this form and whether assessee is an eligible assessee, whether transaction is an eligible international transaction or not. So here AO will check that assessee is an eligible assessee or not, this eligible transaction is an eligible transaction or not. Now next part, reference to the TPO. If AO has a doubt, suppose for an example AO has the doubt, oh, it is an international transaction or not, is assessee is an eligible assessee or not, is they are into the core auto component manufacturing or not, so he may transfer your case to the TPO, transfer pricing officer. Now time limit. Reference must be made within 2 months from the end of the month in the receipt of the form 3CEFA. So here if AO is having any doubt, AO may transfer your case to the TPO, and it has to be done within the 2 months from the end of the month in which receipt of the 3CEFA. So whenever you file the 3CEFA from the end of that month, within the 2 months, he will transfer case to the TPO. Now what TPO will do? So TPO may issue the notice to furnish the document and information to the assessee. He may ask for document and information from the assessee. Assessee must comply within the time given. TPO can declare option valid if TPO can declare this option invalid if assessee fails to furnish the information. or assessee is not a eligible assessee, or transaction is not a eligible international transaction, TPO passes the written order and copy served to the assessee and AO. So guys, here what will happen? TPO will pass the order and TPO may declare that is the invalid. Invalid can be declared this option in the three cases. One is the assessee fails to furnish the information, or assessee is not a eligible assessee, or assessee is not doing that eligible international transaction. In this case, TPO may declare it is a invalid. Now what will happen? Remedy before the commissioner appeal against the order of TPO. Suppose TPO passed the order and you are not satisfied with the TPO order, then you can file appeal to the CIT, that is commissioner. Now what will happen here? If assessee object within 15 days of the TPO order, then CIT to decide within 2 months from the end of the month in which receipt of objection. So you will file an objection to the CIT, that is commissioner. Only CIT is written to the commissioner. And guys, within 15 days of the TPO order, you have to file the objection, and objection is filed, then CIT to decide within the 2 months from the end of the month of receipt of the objection, and CIT will pass the order, and here order served to the assessee and AO, and if AO, TPO or commissioner does not act within the prescribed time limit, then guys, option deemed to be valid. Means that everyone has to be follow the time limit given in the law. If this AO or TPO or commissioner, they are not following the time limit, it means whatever option you have exercised, that is the valid option. Now guys, there is some important notes are given. What this note says: first point, tolerance range. That is the second proviso to section 92C subsection 2. Yesterday we have discussed. Not applicable once safe harbor is opted. Guys, you know that yesterday we have discussed that plus minus 3% tolerance band, and in case of the wholesale trade there is a 1%. So question is that, sir, that tolerance range is applicable if safe harbor rule is applicable if 18%, 17% or 24%, and also question is that is applicable? Answer is no, that is not applicable. Now second part is the TP documentation and report. Means sir, is we have to furnish that TP study report and all or not if safe harbor is opted. Then section 92D, that maintenance of information, and 92E, that chartered accountant report. Chartered accountant report in form number 3 CAB is still compulsory even under the safe harbor. So even you follow the safe harbor, then also guys, that TP study report is must, as well as the chartered accountant, that audit report of the transfer pricing, that is also must. Now there is some exclusion. Exclusion says that safe harbor is not applicable if associate enterprise is in the notified jurisdictional area, or no tax area, or low tax country where highest tax rate is 15%, 94A. This point you will able to understand in the tomorrow lecture. But guys, you cannot take the safe harbor if your associate enterprise is located in any country where there is no tax, or there is a very less tax, or no notified jurisdictional area. Notified jurisdictional area means the country which is not supporting India. So suppose if your associate enterprise is located in the notified jurisdictional area, or no tax country, or low tax country, means their tax rate is maximum 15% karke, theek hai? So, like their tax rate is less than 15%, highest tax rate is less than 15%. If your associate enterprise is located in those countries, then guys, you cannot take the safe harbor. So safe harbor is not applicable if your associate enterprise is located in the notified jurisdictional area. Now what is the notified jurisdictional area? That we will discuss tomorrow. One is the no tax area, or low tax area, or tax haven countries. Then guys, you cannot opt the safe harbor. And last part, no map. Now what is the meaning of map? Map also we will discuss tomorrow. But map says that if the transfer pricing is accepted under the safe harbor, assessee cannot invoke the map under the DTAA for that transaction. Map means guys, there is one procedure in the double taxation avoidance agreement between two countries. Suppose if DTAA is not giving you some benefit, then you can request to Indian Income Tax Authority, and Indian Income Tax Authority can connect to the Foreign Income Tax Authority, and they both can meet and they can provide you one solution. That is called mutual agreement procedure. That we will discuss in the later part. But guys, that map is not applicable if you are opting the safe harbor rules. Done. This is the completion of safe harbor rules. Now question is that, sir, which type of question we will get in the examination? So guys, which type of question you are going to get in the examination? So here two examples are given. Basically this is not a two example. This is basically from the past examination in the 2018 and 17, this safe harbor rule were applicable for examination. So from there, I took these examples. So example number 1, all people focus here. ABC company is an Indian LLP, is solely engaged in manufacture and export of the engine parts, including cooling system and engine valves. So basically, there is a one company, name is a ABC company. They are the Indian LLP, solely engaged in the manufacture and export of the engine. So they are manufacturing and export of the engine. So can I say that this is the core auto component? Core auto component, they are manufacturing and exporting the core auto component. It had supplied auto component worth 72 crores during the financial year 24-25 to the XYZ LLP, a foreign LLP located in the Germany, that is controlled by A and B, the partner of Indian LLP, along with their relatives. So guys, against the aggregate value of transaction entered into the mention above, the Indian LLP incurred operating expenses of 60 crore, leaving an operating profit of the 4.5 crore. So guys, again, like now try to understand what happened here. Again, read it. ABC and company is an Indian LLP. They are engaged in the manufacture and export of the core auto component. It had supplied auto component of 72 crore rupees during the financial year 24-25 to the one of the XYZ LLP, a foreign LLP located in the Germany. But that is controlled by the A and B, the partner of Indian LLP, along with their relatives. So guys, there are common person, they are controlling that enterprise also and Indian enterprise also. So both are basically controlled by the A and B, that is the partner, along with their relative. Against the aggregate value of transaction entered into the mention above, the Indian LLP incurred operating expenses of the 60 crore, having the operating profit of the 4.5 crore. So guys, first point is they are associate enterprise or not? Is they are associate enterprise or not? So solution, just read it. ABC and company is an Indian LLP. So guys, you know that yesterday we have discussed that in case of the like LLP or partnership firm, if there is a 10% or more PSR then it is treated as associate enterprise. So ABC and company Indian LLP and XYZ LLP is a foreign LLP are deemed to be associate enterprise, since XYZ LLP is controlled by A and B, who are the partner of ABC and company, along with their relatives. So basically here, like common person is controlling that entity as well as the Indian entity. So in this particular case, they both are the associate enterprise. Now, if they both are the associate enterprise and here they are exporting, manufacturing and export the core auto component, then in case of the core auto component, they should declare the profit of the 12%. Here what happened, how much they are declaring? So here 4.5 crore is profit and operating cost is, that operating expenses is 60 crore. So in the 60 crore, you can see here 4.5 divided by 60 multiply by 100, it comes to the 7.5 crore, 7.5%. So they are declaring the profit of only 7.5%. So is it as per the safe harbor? Answer is no, it is not as per the safe harbor. It is not as per the safe harbor. Now what are the question? Question is, first question, compute the primary adjustment required to be made for the assessment year 25-26, if any, assuming that the Indian LLP exercise the valid option for application of safe harbor rules prescribed under the rule number 10 TD. Read with the section 92 CB of the Income Tax Act. So guys, they are declaring the profit only 7.5%. But if they wish to follow the safe harbor, then they should declare profit at least 12%. At least 12% on the operating cost. So 60% multiply by 12, sorry, 60 crore multiply by 12%, it comes to the 7.2 crore. So 7.2 crore profit should be declared instead of the 4.5 they are declaring. So guys, if they want to opt the safe harbor, then 7.2 crore should declare and they are declaring 4.5 crore. So guys, how much their income should be increased? So 7.2 minus 4.5, it comes to the 2.7 crore. Their income should be increased. This is called your primary adjustment. This is called your primary adjustment. So here your primary adjustment is a 2.7 crore. This much income should be increase of this particular company. Now second part. Examine the applicability of safe harbor rules if the foreign LLP is in the located in notified jurisdictional area. Guys, notified jurisdictional area, tomorrow I will explain you, but notified jurisdictional area, if your associate enterprise is located in the NJ, notified jurisdictional area, then guys, this safe harbor rule is not applicable. Then you cannot take the safe harbor rule. So if your associate enterprise is located in notified jurisdictional area or associate enterprise is basically located in the low tax jurisdiction, no tax jurisdiction, their tax rate is less than 15% maximum. In this particular case, safe harbor rules is not applicable. So guys, you can read the solution. Now, after that, just check the question number 2. So here question number 2 is very simple question. What this question says, try to understand. Examine the following transaction and advise whether the transfer pricing declared by the following assessee who have exercised the valid option of application of safe harbor rules, can be accepted by the income tax authority or not. So guys, here first is Ben Limited is an Indian company and they are providing provision of the data processing services with the use of the information technology to INC. So basically information technology, it is a IT enabled service. It's foreign subsidiary. So foreign subsidiary is associate enterprise. Now aggregate value of transaction in the previous year 24-25 is a 180 crore. Declaring operating profit margin is 30 crore and guys their operating expenses is 150 crore. Now guys, you know that in case of the software development service and IT enabled service, if your international transaction is within the limit of the 100 crore, then you should declare the 17%. If it is more than 100 crore up to 200 crore, then declare the 18%. So here guys, basically here 30 divided by operating profit is 150 multiply by 100. So can I say that they are declaring the 20% profit? They are declaring 20% profit. It should be declared at least 18% because here international transaction is more than 100 crore within the limit of the 300 crore. So they should declare the 18%, but here they are declaring 30 divided by 150 is a 20%. So it is as per safe harbor. There is no issue at all. It is as per the safe harbor. So it is as per the safe harbor rule. There is no issue at all. Now next part. Den Limited is an Indian company. Provision for contract R&D service relating to the generic pharmaceutical drugs. Guys, you know that in case of that R&D service, contract R&D service related to the software development as well as the generic pharmaceutical, you should declare at least 24% profit. At least 24% profit. And guys, XYZ Inc, a foreign company which guarantee 15% of the total borrowing of the Den Limited. So both are associate enterprise. Guys, here how much profit they are declaring? So 9 crore divided by 30 multiply by 100, it comes to the like 30% profit they are declaring. So it is 24% or more now. So it is 24% or more. So it means it is as per the safe harbor. In all the above cases, it may assume that Indian entity which provide the service assumes insignificant risk. It may also be assumed that the foreign entity referred in above are non-resident in India. So guys, just do one thing. I am going to give you 3-4 minutes time. Just read solution of both the question. Just read solution of both the question. And here I am going to display one more question from the RTP of Jan 2021. Because now it is applicable. So here in the RTP Jan 2026, there is a one question. So I'm going to show you that question also. RTP final Jan 2026 direct tax and international taxation. So this is one question. Similar question, I think, but just let me know. After checking this question, let me show you. So first read that two question solution And then just check this question number 19 of the Jan 2026 RTP, and just check that is they are on safe harbor or not. Just check it. Okay, done people. So in these three cases, tell me, provision of system support service is basically software development service. Huh? Provision for data processing service, use of IT information technology, that is IT enabled service. And provision of contract R&D service, that is R&D software development service. मतलब research and development related to software development. So here in the first case, that international transaction is 9, it is a software development service. Here it is a IT enabled service, and here it is the basically your R&D service. Here in first case, profit is declared as 8 divided by 50 multiplied by 100. So it's only 16%. So this is not as per safe harbor. This is not as per safe harbor. For safe harbor, they should declare at least here 17% profit. In the second case, 45 divided by 225 multiplied by 100, it is a 20%. So can I say that here within the limit of 300 crore? Yeah. So 20% as per safe harbor, answer is yes. Now here it is a 24% or not. Contract R&D 50 divided by 250 multiplied by 100. It's 20%. So it's not as per the safe harbor. So only second is as per the safe harbor and other two are not as per the safe harbor. So just see the solution of this question number 19. Let me show you the solution. So this is the question number 19. If you wish to read, you can read it. So here in the first case, can I say that hence it is not binding to the income tax authority to accept the transfer pricing declared by tax mitra because it is 16%. It is not as per safe harbor. Safe harbor, they need 17%. Now second case, instead of 18%, they are declaring 20%. So hence the income tax authority shall accept the transfer price declared by the Next Era System India Limited in the respect of such international transaction. And guys, in the third case, hence it is not binding to income tax authority to accept the transfer price declared by the Pragati and company because they have declared the 20%, safe harbor is 24%. Done. So this type of question you may get in your examination. This 3 question, out of this 3 question, I think 1 question you will get in your examination.